Ooh. All right, guys. Ooh, I'm awake. All right, team. We got bank earnings today, man. We got JP Morgan, Chase, Wells Fargo, BOK, Citigroup. What's up, Roderick, Matev, Horace, One Love, JJ, Trev, DS, Bills, Liv, Robert, Johnny. All right. Yeah, I mean, honestly, I'm sure shorts have been getting just punished right now. There was just the market's just been pushing up a lot. Sorry, I just woke up, man. I haven't even drank my coffee yet, so JP Morgan Chase sitting at about 129.30s. So my mother-in-law yesterday said I looked like Kit Harington from Game of Thrones. I don't know if I see it though. To be honest. I don't know if I see it. I guess it's a compliment, but like I don't know if I see it. See, he's got darker hair than I do though. There's a difference. What's up, Manny? Too big to fail. Yeah, the bank earnings would be really, really interesting. Wait, where is this music coming from? Uh, hmm, can't do it. All right. Yeah, maybe DS. Boom, roasted. Got him. That's all right. I don't know if I see it. But she told me I was at my daughter's last softball game yesterday. She's like, "You look just like Kit Harington," and I was like, "Do I really though?" I was like, "Sure, I would love to, you know, look like Game of Thrones Jon Snow, but like, you know, I don't know if I see it." Yeah, man. Pre-market moves are just different story, man. They're just a different animal, brother. Market just moves in pre-market currently with all the stuff. I'm sure I could use one of those apps to throw me in there. All right. So yeah, our earnings today, guys. JP Morgan expected to show up at 341 per share, 136.04 billion in sales revenue. Let me get some music playing here. Oh man, you know you're tired when you have to yawn, when it's like forced out of you, where it's like you don't even think about yawning and then you just kind of have to yawn all of a sudden. Like you're tired then. Um, hey, what's up, working? Hey, no worries, man. All right. Supposedly, many banks took out $100 million loan, whether they needed it or not. Maybe. Winter crash is coming. Bro. I mean, listen. If bank earnings today do not tank the market, then we're probably not going to crash, is what I'm assuming. Because, I mean, let's just be honest here. We had really important economic data that came in better than expected. And so that's some optimistic signs. Like, again, in 2008, not so many people thought we would crash. And the Fed does a good job of avoiding said crash. And so all the people that come to my stream every day and tell people the crash is imminent, they went from saying a crash is going to happen soon, sell, do it now. They went from saying that to now they're basically like saying, okay, well, we might crash, but it's going to be later this year. So it's like, okay, whatever. But yeah, but banks will influence it the most. What's up, Marty? Oh, man. There's another yawn, dude. I couldn't even help that one. That one just kind of came. All right. No one knows anything. Another bank failure and we will crash. Just be cautious. Yeah, 100%. No, I can agree with you there. Nobody knows anything. I don't think so, Michael, but I would check with them first. So I don't think so, but maybe. I don't know. Yeah, I would check with them first, bro. All right, guys. Ooh, man, I needed that coffee. I gotta wake up a little bit here. I'm just dragging today. Retail sales data comes out today. Very big, important release as well. Aside from bank earnings, again, we do have retail sales data dropping today. Very important release. Very influential release. Will move markets. To what degree we don't know, but will move markets. Retail sales data coming out today. Important data too. And so the data is expected to show up today at minus 0.4% for retail sales. Core retail sales expected to show up at minus 0.3%. So big day for data. Big day. Data is released at 8:30. I'll put a timer up like we always do here. Data comes out at 8:30. There we go. Timer is up. We got about 2 hours and 2 minutes or so. But yeah, data comes out at 8:30. Bank earnings are released earlier than that and some most later than that. So JP Morgan earnings comes out in about 20 minutes. 20 minutes for JP Morgan. 22 minutes to be exact. But JP Morgan comes out with their numbers. You can see this middle chart here is JP Morgan, and this will be the domino to start off the banks. Expectations for JP Morgan, we'll put this up on screen, but expectations right now are for 341 So again, JP Morgan is expecting $3.41 EPS on 36.04 billion in sales. Right. So numbers come out at 650. We will put this up on screen because this is the most upcoming release. Yeah, JP Morgan data coming out. We also have retail sales to release at 8:30, import-export prices, JP Morgan earnings, Wells Fargo earnings, Citigroup earnings, BlackRock earnings. Just a lot of stuff coming up. You can see JP Morgan right here sitting, gapping up a little bit. Had a kind of a flat day yesterday where we gapped down pretty big and then we rebound pretty big. We ended up on the day, and now we're slightly green relative to where we were yesterday. BOK released. Yeah, BOK is already out. BOK posted. They posted early, but BOK is out with their earnings. Let me see what they showed up as. BOK showed up as BOK showed up at 764 EPS on 4.243 billion in revenue. So BOK beat on revenue, missed on EPS. Again, EPS showed up at 764. We'll put this up on screen so you can see it. Or no, they beat on both. Or no, they did the opposite. So it was reported. BOK posted 793 EPS, beat 773 estimates. Sales came in at 4.24 billion, which I'm showing was a beat here. Because I was showing the expectations for sales were 4.2, but whatever platform this is saying they missed it. But here's that data right here if you want to see it. But yeah, BOK is out. Mixed results for it. But honestly, it looks mostly positive to me. So, but we'll see. Again, JP Morgan's the big one. They're going to be dropping theirs. BOK doesn't really move that much in terms of like volatility and liquidity. You can kind of see it's not the most liquid bank stock right here. It kind of chops back and forth. JP Morgan is a little bit more liquid and just volatile and moves a little bit more. So JP Morgan at 129.20s right now. Again, expectations are on the screen. Those numbers drop at 6:50 Eastern Standard Time, so in about 20 minutes. And then retail sales, import, export data comes out at 8:30 in about 2 hours. Yeah, CXAI. If it's not a short squeeze, then it's a pump and dump. Not a short squeeze, just a pump and dump. Yeah, and I think every blue moon you'll get companies like this that want to pump themselves up. You know, that they think that the risk is worth. Most of the time, what's going on with these companies is that like the CEOs know they are not going to make money long term with their stock. They basically know their company's not going to succeed long term. And so no news to justify this pump. which is what it is. And so a lot of the times the CEOs will like know that these companies are not going to make money long term. And so what they do on a short term basis is they pump the price of their stock up to ridiculous levels, wait until they're at the top, and then they just unload shares and make millions doing it. And then they try to avoid getting charged, which sometimes they do, and sometimes they don't. But I guess the point here is that this is not a strength move. There's not really any news. There's no short float here. And so the only justifiable thing that could be happening here is the pump and dump, So we'll see. I mean, it could go theoretically up an infinite amount here. So we don't know when it's going to stop, but just be careful there, guys. That's all I'm going to say about that. Force Gump. Yeah, sometimes it's slam on offering at the top too. Yeah, maybe Beach. What's up, Kira and Johnny? Regardless of what these stocks do, like I don't ever get FOMO with them. I really don't. Like I saw, was it TRKA ripping up the other day? What was the other one that was ripping up? It wasn't CXAI. It was something else. Oh, it was GFAI is what it was. Guard Force AI. It's starting to give the gains back too. Yeah. Yeah, for sure. Kind of crazy. Yeah, y'all hit that like button, hit the notification bell. We appreciate the love. All right, team. We got about 200 here. Yeah, you got to get out. I mean, yeah, bro. I mean, if you're up from $1 something all the way up to 45, you got to cut that. Another option that you could is take like 90% of the trade off and leave 10% in case it goes crazy. But I couldn't imagine that it goes that much higher over 70. Again, this is like if this was like a mid cap, I would be like, okay. But this is an obscure penny stock that nobody really has ever heard of. And so what, again, I'm going to be honest with you guys. What's most likely going on is CEO / executive / insider pump. Maybe not. Somebody said, I think Beach Bum said it was an AI pump. And that's possible because I know GFAI is ripping up too. But just by the off chance that it is a executive slash CEO slash, you know, insider pump and dump, again, the whole point of those are to pump the stock up so they can either do an offering, which will dump the stock, or so they can unload their own shares themselves and make millions because they don't believe in the company long term. Even if those aren't necessarily true and we don't really know, it's better to lock in profit there. Again, a lot of people get greedy. Again, imagine how it would feel to ride that pump up the entire amount, like ride it up to $60, $70, and then get greedy and never take any profit, not lock in any money like AMC traders, to be honest. Like some GameStop traders, to be honest. And imagine what that feels like to be up so much already, yet get so greedy you didn't take profit, and then you have to just watch it come all the way back down. Like that's really disheartening. That will hurt really, really bad. And so again, do the right I'm not going to tell you guys what to do. I have no idea what you should do, but if you're in from much cheaper levels, generally the best advice is to take profit. But I don't know for sure. Not an investment professional, not liable if you lose. Don't sue me. I have no idea what I'm talking about. Oh yeah, 100%. If she had 2,000 shares, then y'all just made six figures, close to it at least. You made depending on where you bought in at it, but you made close to six figures if you wrote it up to 50 or 40. Where did y'all sell? 45. Yeah, so you're up 90K basically. So depending on where you got in. So congrats, man. That's great, dude. I'm happy for you guys. Genuinely happy for y'all. I can't sell till 6. Ew. Oh, you got 20 minutes, man. You should be all right. Oh, wait. A lot of y'all are stuck. All right, guys. Again, JP Morgan earnings in about 10 minutes. Be ready. See what those do to the market. JP Morgan. Yeah, y'all be ready, guys. Earnings coming out. Big earnings report here. Bank crisis happened in the last couple months. JP Morgan earnings. BOK had mixed results. So BOK already dropped their numbers here. We also have Citigroup, Wells Fargo. So the only big four that we don't have is Bank of America. So we have JP Morgan Chase. The big four banks. Okay, so the largest banks in the world, the largest consumer banks, that is, are JP Morgan Chase, Wells Fargo, Bank of America, and Citigroup. So JPM, JP Morgan Chase, JPM is the symbol. Wells Fargo, WFC is the symbol. Citigroup, C, just the letter C is the symbol for Citigroup. And then Bank of America, I believe, is BAC. BAC is Bank of America. And then we have Pinnacle as well. Yeah, so Pinnacle, PNC as well. So these are really important numbers because of the banking crisis that happened. And a lot of people are worried about how this is going to affect everything. But very important numbers here, team. So y'all be ready. Yeah, a lot of hype. AI is huge, though. You know. So like AI news is super important. Um, Looking at the float's tiny for CFAI or CXAI as well. So small float stock, small market moves. We'll see if we get anything else moving here. All right, CXAI at 30. Back up to 30. We still got about 6 minutes before BAO earnings. Yeah, we got 6 minutes before JP Morgan. Google's your friend, my. PNC beat. PNC Financial first quarter diluted EPS 398 versus 367 expected. So yeah, PNC just dropped their numbers a couple minutes ago. Here's PNC earnings right here. So a lot of the banks actually beat, which kind of a lot of people. Okay, one of the theories that was going on during the whole banking problem is that a lot of people thought that. Here's PNC numbers in chat right here. A lot of people thought that that the big banks were going to be fine from all this. So a lot of people thought the big banks were going to be okay. All right, guys. I don't think the numbers matter much when the guidance come out. Well, so for BLK, I don't see any guidance here for BLK. PNC did gap up pretty substantially. PNC numbers here specifically, it looks like they missed revenue. So for PNC, so PNC 398 versus 367, sales of 5.6 versus 5.61 estimates. So slight miss on sales, beat on EPS. I don't see any guidance numbers here. And if you want to know what is guidance, look for one that says C's. So you want to look for one that says like PNC C's, SEES, and then that's guidance. Anytime it says C's, it means future projections, which is guidance. Share buyback activity. Well, the buyback is not good. Them reducing buyback is not good necessarily. Yeah, for sure, Beach. Hey, man. I believe in AI, bro. I don't know. I think in some ways it's not great, but I think in a lot of ways it is. And then you got some people who are just scared of AI, like they're scared of Skynet from Terminator. Wells Fargo just dropped, guys. So all of them are dropping at once. Here's Wells Fargo right now. Wells Fargo just dropped. They posted 123 EPS versus 113 expected, revenue of 20.7 billion versus 20.07 billion expectation. So Wells Fargo just beat their earnings too. A lot of these aren't supposed to come out until later, but Wells Fargo just beat. We'll put these numbers up on screen. But yeah, Wells Fargo just popped on this data here. Like there's the Wells Fargo numbers right there. And Wells Fargo wasn't actually supposed to come out with theirs until Wells Fargo wasn't scheduled to drop theirs until 7 this morning. BOK, United Health, Citigroup drops at 8. So Citigroup and JP Morgan will be the last two, except for Berna. But yeah, we haven't had one major miss in terms of earnings. Look at Wells Fargo skyrocket up here. So not skyrocket, maybe that's a little bit of an exaggeration, or not necessarily an exaggeration, just an embellishment. But up to 39.80s here, 39.80s for Wells Fargo. JP Morgan at 129.20s, SPY at 413s. But Wells Fargo with the beat here, guys. Wells Fargo just beat earnings. And so again, a lot of people speculated that the banking crisis with the little bank and the little banks would help the big banks. And I think that's kind of what we're seeing right now. All right, guys, SPY at 413s right now. So SPY moving back up with these bank numbers here. JP Morgan's the last domino to fall. It should drop in about a minute here, less than a minute, about 20 seconds for JP Morgan. But Wells Fargo beat as well. Total average deposits came in at 1.36 trillion, expected 1.38, so a little bit lower average deposits, but that's, I guess, to be expected here. JP Morgan moving up on this banking sympathy, but so far so good here. Then we got JP Morgan as the last bank domino to fall outside of Citigroup in the early morning here. So there is 650 on the dot. Let's look for JP Morgan to move. All right, JP Morgan is out. JP Morgan posted $4.10 EPS. So $4.10 EPS versus 341 estimate. So much better. I don't know if they're going to adjust this, but JP Morgan 410 expected 341, revenue of 39.34, expected 36.24. So beat on both metrics here for JP Morgan. And look at JP Morgan rip up. It's at 131s now. So we haven't had one big bank miss earnings this morning. Not one. There's the link. Yeah, you might be right, John. I have to look. I don't know. We can look at the way we can look at this is SIVB. Is SIVB not a symbol anymore? What about First Republic? Here's First Republic. No, this would be included in the quarter. I don't know. Let me see. Yeah, I mean, JP Morgan's first quarter, so it's the first 3 months, right? Which includes March, and this is March. You know, January, February, March. So this would be included in in JP Morgan. JP Morgan's still moving up. Again, the theory here is that like when little banks fail, what are people going to do? You got to think of psychologically. You got to think about it psychologically. Here's JP Morgan. Again, you got to think about it psychologically. All right, little banks fail. What are people going to do? They're going to take their money out the little banks and they're going to put it in the big safe banks. And I'm not saying that's accurate. I'm saying that's what people are going to do. Is that they're going to say, "Hey, this bank is sketchy. Let me put my money in Chase instead. Let me put my money in Wells Fargo instead. Let me put my money in Bank of America instead." That's what they're going to do. And so in that, despite it being first quarter, which was in this, right? If you look at when this was, I mean, it stopped, you know, again, it started March or early March, which is the first quarter. First quarter is the first 3 months. So JP Morgan reports 868 million net investment security losses in corporate, resulting in a loss of $22 per share. But yeah, banks doing great in all this, to be honest. First quarter net charge-offs was 1.1 billion. First quarter net credit loss provision reserve build is 1.1 billion. First quarter net reserve build largely driven by deterioration in weighted average economic outlook. BAC, Bank of America. Yeah, just be careful, but banks are loving it, man. Look at JP Morgan fly up here. It's at 130s right now. 130s. Wells Fargo up pretty big. Banks are running. All right, guys. Look at JP Morgan rip up even more at 133s here. 133s. Wells Fargo at 39.80s. All right, starting to pull back a little bit here. Good morning, everybody. Again, thanks for covering all the data releases and even some earnings. What time are the banks earnings today? I know before market, but what time? They're already out, bro. Most of them are already out. Bank earnings. JP Morgan beat on EPS, beat on revenue. Again, JP Morgan numbers are right here in chat. We'll put them up in chat one more time. We also had Wells Fargo beat on EPS, beat on revenue. So Wells Fargo beat as well. PNC beat on EPS, missed on revenue. And then we also had BLK, which had mixed result. Beat on EPS, miss on sales revenue. So either mixed or good results for all the banks today, basically all of them. Yeah, if we look at the SPY here. All right, guys. Wells Fargo still testing those highs. All right, guys. All right, guys. Market's still pumping up. JP Morgan at 135s right now. So trading opens up for a lot of people in about 30 seconds. 30 seconds. JP Morgan beat. JP Morgan, yeah, beat. Wells Fargo beat. Pinnacle beat. BOK mixed results, I believe, is what it was. Yeah, so again, some people's trading opens up in about 10 seconds here now, guys. So again, we'll see what happens. All right, so look, there goes CXAI. Look at the effect. So a lot of people are just able to trade. Look at CXAI right now. It is dumping. Everybody's like, get the F out of here now. Look at CXAI, bro. It is dumping down. It just dropped freaking 30% in about 10 seconds for CXAI. CXAI just dropped about about $10 a share very quickly. Back up right now, though. It's surprising to see it get bought back up this quick. But I think people are just like, hey, let's get the F out of here and lock in profit before it falls more. If you can make 10 to 20x, hey, you're doing pretty good there. But see, Citigroup drops at 8, I believe. I don't think Citi's out with theirs yet. So they drop at 8 p.m. So they drop in an hour or so. Yeah, dude, CXAI is just, everybody's scared. But yeah, JP Morgan ripping up, Wells Fargo ripping up, PNC had earnings too. Bro, who the heck is sneaky? Now you gotta, now I want to listen to who this is. I don't even know who Sneaky is, bro. I've got a raspy voice. I can't help it. Some people said, like, one time somebody accused me of masking my voice, of trying to make it sound deeper than it actually is. That's not really what it is at all. What it really is like if you catch me when I first wake up in the morning, I'm like, hello, you know. But it doesn't stay that way. As soon as I wake up, like within an hour or two, within an hour or two, I go back to like Pee Wee Herman style voice, you know. All right, guys, look at JP Morgan still rip it up even more here. So JP Morgan still rip it up even more. Yeah, I don't know. I don't know if I buy that voice. I don't know if I sound like him. It's not like it's super high or anything, but like, yeah, definitely third top voice in the world. You beat Moo Moo? Yeah, bro. Well, I mean, we're gonna beat Moo Moo. I mean, listen. When you're top 3 best looking traders in the world right now, I mean, Moo Moo doesn't even, doesn't have anything. Yeah, retail sales coming out today. Big day. What's up, Chris? Hey, good morning, guys. Yeah, JP Morgan flying up. So is Wells Fargo here. Look at Wells. Wells is up to 40.6 basically right now. Yeah, it should be a volatile day. Volatile Friday. All right, guys, still pumping up. We are at 137s right now. 137s. Will banks dump after bad retail sales? No, most likely not. I don't know. I think if they dump, it's not going to be from retail sales necessarily. It's most likely going to be from extension because they're pushing up so much right now. And the market is up as a whole a lot over the last 24 hours from CPI, PPI, both coming in noticeably lower than expected here. And again, if you can learn anything from these data releases over the last couple of days, hopefully you learn to tune out the crash whisperers, is what I call them, the crash whisperers. So every big economic data release, bro, we get people here, I call them crash whisperers. They come here and they're like, see, a lot of them don't show up after we don't crash. A lot of them will be like, yo, sell now. Do it now, sell. Do it now. And they were like, the market's going to crash. They're all cryptic. They're like, we don't, all I'm saying is sell now, and then the market doesn't crash and the economic data comes in better than expected. The market pushes up pretty big amounts, right? And then it's just kind of like crickets. You never see them again. They're gone, Then they're just gone and you never see them again. And so if you could learn anything from these economic releases here, it's ignore the crash whisperers, okay? Like, they are emotional is the best way to put it. Most of the time, they're really extended in short positions. A lot of the time, they're like huge Michael Burry fans. And maybe Michael Burry's right. I'm not saying he's not right. But you know how difficult it is to call a short, like a market crash, to predict a market crash within a week. Bro, nobody's going to be able to do that. Michael Burry can't even do that. And so every major economic release, people say, crash, the market's going to crash. And then we don't. And then they usually change it from market's about to crash now to, oh, well, market's going to crash later on, you know. And they're just going to expand it a little bit more. Happens every time. I see it happen every time. And again, I'm sitting here in the line of fire being like, yo, no. Like, we're not going to crash. And so you're welcome, guys. What's up, Raphael? All right, team. Don't hate my music, chocolate. How the F is FRC not up 50%? They're not up 50% because they're still weak, man. I mean, I'm not saying they're weak. I don't know what they're doing, right? But what I'm saying is, like, the big banks being healthy doesn't mean FRC is healthy. You know, if anything, there's an inverse correlation sometimes between the big banks and the small banks, because when the small banks are struggling, people gravitate towards the big banks, you know? And so that's why FRC is not just, you know, it's up a little bit, but it's only up to 1420s. So market doesn't crash, but dollar would be worth less in the next few years. Yeah, maybe. Been trading for decades, seen a lot of barkers who sell dreams. John, I think you're one of the most legit guys to come around. Hey, thank you, brother. I appreciate it. I try to just be honest with people, man. Like, I don't have any bias in terms of, like, you know, I'm not out there, you know, watching The Big Short over and over again, dreaming of being Michael Burry one day. And I think a lot of people are, you know. I just try to be honest with people. Marky could, again, I'll be honest. I think we could go, again, I agree with the Fed. I think we could go into a small recession later. But I don't think it'll last very long. I definitely don't think it's going to be like a cataclysmic event like a lot of people are projecting it to be. And again, you guys got to understand, when the market actually does crash, very few people predict it like the guy. Like, everybody, over the last 2 months, everybody's been running around saying a market crash is happening, you know. But when crashes actually do happen, you usually don't have a bunch of talking heads about it, you know. Yeah, I'm a dream crusher over here, not a dream seller. You know, we're out here just destroying dreams. If you think you're going to get rich in penny stock, boom, I'm here to tell you you're not. You know, I'm the anti-guru over here. Bank earnings, I think all the bank earnings were very good. Banks are flying up, huge numbers. Wells Fargo just broke highs. So yeah, I think all the bank earnings were pretty solid. You know, well, I think rates are going to keep getting higher, King. And again, people act like I'm just permanently bullish. I'm not. Like, to be honest, okay, like, I'm a real estate agent as well, and so I've got some friends in mortgages and banking and real estate, and a lot of them, and it's not just one, a lot of them think mortgage rates are going to keep getting higher. And mortgage rates are ridiculously high right now. Okay, so like to put it into perspective, mortgage rates right now are like 7%, which is freaking obscenely high. And most of the people I talk to think that the rates uh, are just going to keep getting higher, as well as like bonds and notes and bills. They think those are going to get higher as well, which means that the investors are worried about inflation. They're worried about rates, uh, and so yeah. And so I'm not saying like it's all sunshine and rainbows over here with the market. I'm not. Again, I think we might go into a mild recession later on this year, or maybe next year. But I also don't think like a cataclysmic market crash. Like somebody told me the other day, they thought they thought the SPY was gonna go to 80. They said the SPY was gonna drop 80% and be worth $80 a share. And if you think my math's off just because it's 80 and 80, it's not. Okay. Again, SPY right now at about 410. If it drops 80%, it's gonna be at $82. I mean, I'm not saying it's impossible, but that's highly unlikely. Highly unlikely. And so I think it's just about having reasonable expectations for the market right now. Just being reasonable with it. Having reasonable expectations. Like I don't think the SPY is going to drop to 80. I don't think the S&P 500. I don't think the S&P 500 is going to drop to $800. I think that overall, we could get some pullbacks. We could get some corrections. And again, I haven't really been buying up anything. So it's like the mark has been too high for me. But honestly, if we keep moving up like this, I might find myself into position to having to readjust my general pullback targets. So like what I mean by that is like right now, I have specific targets that I look to start buying up blue chips, like $90 for Disney. There's a lot of examples like $80, $90 for Google. Microsoft looking at like 210s or 220s or 230s. What's the other one? There's a lot of them. Apple, I'm looking at like 140s or 130s. And again, I have no idea if we're going to get those pullbacks or if those pullbacks would even work. But honestly, if we continue to push up like we have been, I'm going to have to readjust that and raise those a little bit, because the reality of markets, guys, is that generally when you zoom out, S&P 500 is going to go up every year. Not every year. Sorry. That's the wrong way to say it. It's not going to go up every year. I'm sorry. It's not up on the last year. What I mean is that generally over time, the S&P 500 moves up. And so if you don't adjust where you consider cheap prices, then it's just going to blow past you, and you're not going to be able to buy anything. And so it's a patience game, and I haven't really been buying up anything with regards to swing trading because I haven't trusted the market enough to do so. I think the market's been up a little bit too much for my taste, and then CPI came out better than expected. PPI came out better than expected. Bank earnings came out better than expected. And so, again, missed out on maybe some opportunity there, but I'm not going to get super upset about it because, again, part of my swing trading system is just waiting for opportunity. And if I don't see any opportunity on the upside, then I'm just going to wait and be as patient as I can. And I think that's an important part. Somebody famously said, trading is not made in trading. Money's not made in trading. Money is made in waiting for trades, basically. And I've been pretty patient with that. So $7.75 is a historical mortgage rate average since 1971. Last year was at 5%. The year before that was at like 3.5%, Robert. And so rates have increased massively over the last couple of years. So when I say obscenely high, I mean relative to recent prices. And again, I have no idea if the market's going to do anything. I really don't know, but that's kind of how I trade. I don't understand why market is flying mood in recession time. because we're not there yet. We're not in a recession. Because again, I think a lot of people are saying recession because, you know, I think a lot of people overseas might not understand kind of what's going on. But like, okay, the big problem over the last year was not a recession. You know, it was not a recession. The big problem over the last year was inflation problems. Like, it was too high of prices. It was too much GDP growth, you know? And so generally there's going to be a counter to that eventually. And that's usually when we get the recession, which is what could happen now. But again, it's not like we've just been in this huge recessionary, you know, market over the last couple of years. Like, we have had 2 GDP consecutive losing quarters, which does signal a recession one time. And it didn't last. Eventually, you know, the market basically immediately bounced back the following quarter. And that was the last part we really, that was the last time we really tested a recession. Again, a recession is 2 consecutive GDP losing quarters. And GDP growth has been there every release over the last 6 months or so, right? So I guess the point is we're not there yet. Maybe that happens in the future, but we're certainly not in a recession right now. If anything, some people would consider prices too high. That's still, and that's the difference. Is like recessionary problems or inflationary problems, and there's a mix of both of those, and those are both problems right now for us. But again, we're not in a recession yet. Yeah, I don't know. I assuming we might pull back a little bit today. Market's just up so much, but again, I've been saying that every day, and we just keep on moving. Yeah, we're not really in stagflation. Because we're not in stagflation right now because the unemployment rate. What is the unemployment rate? It came out Good Friday is when the last unemployment release dropped. Let me see what it was. Can't remember what it was. It was something. Of course. Let's see. So yeah, unemployment came out last Friday, and it was 3.5%. So it's not terrible. Yeah, so an unemployment rate of about 4 to 6% is considered healthy. Last time it was 3.5%. So we actually had low unemployment. So again, not quite in stagflation yet. We'll see what the unemployment rate next month shows up as. But again, we're not in stagflation yet because unemployment's not high. You know. All right, team. We got about an hour before data comes out. All right, guys. All right, guys. So again, banks earnings, CXAI still ripping back up. I mean, I think a lot of people started to get nervous and started to sell and take profit once TOS opened up for traders. But now that's just kind of flying up. Hey, give me a brief of this report, its effect on crypto. Retail sales, relevant for inflation problems, relevant for economical and GDP growth. Higher is generally going to be seen as worse right now, but it depends on what the market is ultimately fearing. I think with CPI and PPI, the market did rip up, and so we had a little bit of a delayed response from yesterday and the day before's data, but the market still preferred lower inflationary data, of course. And so I think with that in mind, I think we could see a negative reaction to higher than expected retail sales, but it's not a for sure thing. It's definitely not 100% known how the market is going to respond to it. But I think higher retail sales is worse, and I think that will make the market drop potentially. But again, I genuinely don't know, and we'll see what happens. All right, guys. So again, look at CXAI. So AI stocks moving. I want to see how the SPY is affecting all this. What do you guys think retail sales are going to do? Did I even do a poll today? I don't think I did, man. I'm slacking this morning if we didn't do a poll already. Today, I don't think I did, man. Okay. Does the market react well to higher retail sales? Does the market react well to higher retail sales? Yes or no? Hey, what's up, Jen? Happy Friday. JP Morgan and Wells Fargo earnings out already. Wells Fargo, yeah, they're out already. All right, guys, we got about an hour before numbers come out to about an hour. We're not playing poker right now. I had to laugh last night after not trading MMAT for over a year. I finally bought 100 shares, and then they hit with an offering last night. Bad luck. Oh, man. Well, at least it's just 100 shares, bro. So what are you down, like $10? Yeah, MMAT has been one of those companies. I'm not going to speak poorly on it, but it's had a tough couple years. Yeah. Bank of America or Bank of America. Yeah, I don't know what Bank of America is doing. Bank of America just reacting well to earnings today. Bank of America, I don't even think came out with earnings, but they are reacting positively to the other bank stocks that had earnings. You know. Yeah, it's good for currency maybe, but bad for markets, I think. When will Citigroup and BLK earnings? BLK's out already. They had mixed results, I believe. So here's the 7:30 window coming out. So the bank crisis is fading away to a certain extent, yes. But we don't know if it's going to continue, of course. BOK is Interactive Brokers. BOK is BlackRock. Yeah, it's small, just funny. Threw it in there for a long-term hold, not adding. Yeah, I think that's an okay, move. Remember, market went up a lot on good retail sales in January and February. Yeah, for sure. Maybe that could happen. I really don't know what we're gonna get with regards to retail sales here. Genuinely don't know now. All right, guys, we got about an hour. Bank of America ripped up, JP Morgan ripped up, WFC ripped up, PNC ripped up. Basically all banks are up today. Is it good for Bitcoin? I don't know. Again, it's one of those things where higher retail sales is generally favorable for the US dollar, but sometimes that's going to mean higher inflation problems. And if that's how the market interprets it, then the market could drop from higher retail sales data. But again, we don't know for sure. And with crypto in mind, generally there's going to be an inverse correlation between the dollar and crypto. So again, guys, also Top Step has a 25% off sale going on right now for their express funded accounts, and it's recurring as well. So you'll get 25% off recurring on Top Step right now, which is huge. Honestly, it's big thing. So yeah, 25% off lifetime. The reason they're doing the sale right now is because they opened up a new thing called express trader funding, but now you can trade up to 3 accounts. If you didn't see what I posted yesterday on Twitter, what I posted was, let me see. What I posted yesterday was this. Check it out. So Top Step, which is a funded account program in which they give you a demo, they test your profitability, and if you can pass their profitability test, basically the base one, they give you a 50K demo. If you can hit 3K while following their rules without losing 2K, which is a reasonable 2 to 3 ratio as well, but if you can pass their testing, they fund you the same amount as the demo. So the base one's 50K. You pass it, you get 50K in funding with a 90% split. And so if you take that 50K funded account, you make 10K. You keep 9,000 of that. They keep 1,000 since they're funding you. Well, they got 25% off right now. So you're going to get that base package, that 50K package, for like $130 or something like that. Maybe less than that. It might be like 120 something. But what they added is now they give you up. Now you can trade up to 3 express funded accounts. So you can test strategies. If you want to scale one, they're giving you the space to do it your way. Be mindful because now you have the 3x ability to profit, but can also lose 3x if risk isn't managed. Always have a plan. And so, yeah, you can earn and trade in up to 3 express funded accounts. Test various strategies to learn what works best for you and your market conditions. Have one strategy that's crushing it. You can connect a trade copier to scale your profit. You can only have one live funded account, though. And so, yeah, pretty useful, guys. Pretty useful. And again, you get 25% off right now. And so it genuinely is a good thing for traders. It builds your skill, teaches you how to trade. You honestly, I always call these funded account programs, and they're a sponsor of mine, right? So I'm biased in their favor for sure. But I always call these the best of both worlds because if you take this and lose, you're going to lose much less than you would if you put the money up yourself. Like you take these funded account programs, like I said, it's $130 or whatever it is. You lose, you're down $130. It's not the end of the world. You put up the money yourself, you put up 5 or 10K yourself, you could lose thousands of dollars very quickly. So if you lose, it's not the end of the world. You're going to lose less than you would with, real money, most likely. But if you pass it, you still keep 90% of your profit once you're funded. And so it's the best of both worlds. It genuinely builds traders into better traders, in my opinion, because there's a lot of good resources that they have. But yeah, check them out. I'll post the link here. Again, for the time being, you can get 25% off. It's pretty cool. And again, we'll post this link so you can check it out. Here's the link right here. Oh yeah, and you get to keep 5,000 of your first profit. So they're not going to lose 50K. You're not going to be able to lose the full account. They're going to give you a max loss time. And so once you're funded, they're going to have a max loss. You're not going to just be able to YOLO that account because, again, they're actually funding you money with the live funded account. And so they're not going to want to, they're not letting you just YOLO 50K. WFC pulled back to 40.50 and then bounced directly off of it, almost back up to 41s now. Yeah, Bank of America rip, flying up here, man. John, these are great points to short the banks. What do you think? I don't know if I necessarily want to short the banks right now. I don't know if that's necessarily the right move. I'm going to find my Discord. Out of other reports released this week, what do you think will have the most impact among all of them? CPI for sure. CPI is the biggest report this week. It's only futures, and there's no PDT in futures, so you can day trade short in futures. So it's only futures. But again, the futures market, again, I always try to show people this. Like here's the SPY. So here's the S&P 500, basically, and then here's the E-mini. What you'll notice is that this is the same price action. Like this is the same as this, but you can trade this in futures. No PDT rule. You're not restricted by the PDT rule in futures, so you can day trade short with a margin account. Buy market, buy bid, sell the ask. The only difference is the sizing you're using. But yeah. Why is the SPY going down with amazing bank earnings? Well, the SPY's not. I mean, the SPY. Yeah, this is something I honestly see a lot here on this channel, guys. What I see a lot is like the market will move up because of something, like the SPY moving up because of bank earnings, right? And number one, the market is just up huge percentages already. So the SPY is up huge already over the last week or so, basically. And so one thing I'll see happen is like the market will react like this move is from bank earnings, right? So market will move up from bank earnings. And then we get a pullback and people are like, hey, why is the market crashing? They're like, hey, why is the market moving down from earnings? Which is just misleading to say. No offense. I mean, I'm just going to correct you, though. The market's not moving down from earnings. The market is up big from the earnings reports here, guys. The earnings reports, the earnings reports came out right here. You know? And so the market has moved up drastically from these reports. It's not going to go up forever. Eventually, it's going to pull back. You know what I mean? It's just not going to go up forever. All right, guys. So all right, guys, we still got about an hour before earnings come out, about an hour. Or an hour before retail sales. Yeah, market's moving up from CPI and PPI report. What's wrong, Mark? Dude, I sold CXAA for $200 gain and thought it was good. Went up $70. I would have had 35 grand. Oh, man, that's rough, dude. Yeah, I mean, Mark, just some advice, brother. And listen, there'll be other squeezes, man. Okay. I wouldn't bet all your money on them, though. What I would do in those situations is that if it's a low float, obscure stock that's running up big percentages, one thing that I would learn to do is to take partials, brother. Like, take partials. Like, don't make everything one and done where you get in one and then you get out fully. Like, take partials, bro. So get in, you know, if it rips up, take half off and then let the rest sit, you know? At the same time, Mark, just to tell you some things that are going to make you feel better, bro. Nobody could have predicted this big of a squeeze. Like, this is most likely a pump and dump from insiders. And so while I understand you being upset, there's no real way to predict that it was going to go up this much. You know what I mean? And so don't get too upset because nobody knew this was going to happen, basically. Taking profits generally a good move. Yeah, I feel you. I get it. What's up, David? Yeah, better than losing. So will Bed Bath & Beyond squeeze? Yeah, that's right, B. All right, E-Money starting to rip up. SPY starting to rip up. Yeah, it happens, Mark. Don't let it get to you too much, dude. Also, JP Morgan. I think all banks are basically reeling up from earnings. JP Morgan, good earnings. Wells Fargo, good earnings. Bank of America, no earnings today, but reacting in sympathy. Oh, wait, my bad, guys. For whatever it is, I still got the JP Morgan number up right there. Let me fix that. Yeah, we'll put up the JP Morgan numbers. Wells Fargo CFO says consumers continue to spend even as the economy softens, but expect some slowing in the economy so far, but it's been strong. I'll put this up. Yeah, core retail sales today, guys. Be ready. All right, guys. So retail sales data, big day, honestly. All right, finally getting some dips in Bank of America here. Hey, what's up, Critter? All right, guys, we got about 45 minutes before the numbers come out. All right, guys. So bro. John, we need some more life stories today. Yesterday's desperate saleswoman was hilarious. Honestly, it's a true freaking story, bro. Honestly, it's a story that like I tell to my friends because it's true and it's super messed up, bro. Luckily, Carol's like smart enough to kind of identify like when somebody's being like that. Hey man, how you doing, buddy? Love you, man. Have a good day at school, bro. Love you, dude. All right, man. Be safe today, okay? All right, Jack, coming in here. But yeah, dude, that's a real story. Like a real story. And it's like I could see the signs, but I had to let Carol, like once she started like encouraging Carol to like leave me, then Carol just kind of came to me and she was like, hey, like this is what's going on, you know. And then I just kind of told Carol, I was like, look, I was like, I had to put it into perspective to Carol. I was like, look, think about her behavior here. You know, I was like, so she moves here, gets pregnant, baby daddy just leaves, like doesn't know where the you know, and then she's nervous. She's pregnant. She doesn't have the dad anywhere around. Doesn't have any money. Is working for a multi-level marketing / pyramid scheme company. You know what I mean? So like desperate for money, finds another gullible dude to get with her while she's 6 months pregnant. You know, he has dreams of becoming the dad, I guess, and then he's there when the baby's born. But then the dude's mom is just kind of like does what every mom should in that situation and says, son, get the heck out of there, dude. What are you thinking? This girl doesn't love you. She needs a dad, and you need to run away, sir. And then we never saw the guy again. We never saw him again. I'm going to call him Bill. Bill wasn't his name, but I'm going to call him Bill. We never saw Bill again, dude. Honestly, Bill's mom did what every mom in that situation should, which is said, son, she's just looking for, a check, to put it bluntly. Never saw Bill again. And honestly, I was telling Carol the whole time. I would every time she would leave, I'd be like, dude, if I was Bill's mom, I'd do the same thing, man. My son comes to me and says, hey, mom, you know, I'm dating a girl that's 6 months pregnant with another guy's baby. What? Son, get out of there, man. What are you thinking? But yeah, true story, man. And then I think what happened is I think Bill left, and then I think old girl was just kind of. I think Carol and I were like strong as like a couple, like we were strong, like we were a good couple, like we had been with each other for years. Yeah, so Carol and I were strong, and I think she was just bitter because Bill left, and so she wanted a place to stay, didn't have a place to stay. Bill wasn't supporting her anymore, and so she thought she might be able to like, you know, she thought she might be able to break us up, which is really just like an evil thing to do. It's just an evil thing to do. Like you're gonna try to break up a family so you got a place to stay. Like what an evil thing to do, And then Carol wasn't going for it, and so then she, it was just what she ended up doing. I forgot to mention this yesterday, and again, market's still consolidating. It's trying to hold. Yeah, definitely be top 3 in the world. But no, what she ended up doing was like after Bill left, she ended up finding another guy, right? And this other dude was just weird, bro. I was getting kind of weird vibes from this guy. This dude was just strange, And so she had the baby at this point, and she found another guy to basically take her in, But she didn't know this dude for like a week, right? And within a week, she didn't know this guy. She was leaving this dude at home with the baby. She had this dude that she had only known for a week babysitting this kid, which as a parent, I would never leave my kid with some stranger that I've only known for a week, number one. And she would go out to the clubs while she was leaving her baby with a guy she had known less than a week. You know what I mean? And then she was trying to get Carol to go. She'd be like, hey, Carol, why don't you come to the club with me? And Carol would just be like, look, I'm married and, got a year-old baby here. Like, what are you talking about? Like, no, I'm not going to the club with you. And so that's when the whole situation of like, I think she started to realize that like, all right, guys, we got about 40 minutes left. 40 minutes. But yeah, they got people like that out there, man. They're just predatory, dude. They're just predatory, man. You got to guard your family because some people like that are just out there. And this dude was weird too. Like this dude was off. Like the new dude she had met, that dude was strange. Carol and I were like whispering. We were like, dude, who is this guy? Love you. Have a good day. I'm not shorting banks today, Sash. John, what's your take on shorting parabolic moves? I think you can if you can locate shorts, but I think there's risks there. I don't know if UNH is a parabolic move, right? What's parabolic about this? You mean the fact that it's gone from 460 to 526? I don't know if that's necessarily parabolic. I mean, it's up a lot, but most stuff is up a lot. If you look at the SPY itself a lot over the last like 10 days, SPY's up pretty big. If you look at a daily chart, it's up even more. All right, guys. Yeah. And honestly, it was kind of funny because it was like once we figured her out, like once I was telling Carol these things because like I had some intuition about it prior to like what we'll call the confrontation about it. I had some intuition about it too. I kept telling Carol, I was like, look, I was just kind of like, who's gonna get another guy while pregnant with another dude's baby? Like, why not wait and have the baby and then go look for another man? Like, why need to get a man while you're 6 months pregnant? That just looks desperate. No offense to anybody, but that just looks desperate. And so I'm not saying that can't happen, like without being desperate, but the point is, I was in Carol's ear a little bit, like, hey, look, you need to kind of watch so and so. You know, this person might not have the best interests of our family. You know what I mean? And yeah, eventually Carol was like, "Yep." Um, yeah, honestly, markets are ripping up here. Banks are up big. SPY is starting to move back up. SPY almost up to 1440 already. So again, the highs of yesterday are right here. So market just flew up yesterday. The highs of yesterday are right at 413.84 on the SPY 414.84, 413.84. So markets are up big on this data release from the last 2 days. Yeah, it really would, Sal. Honestly, how do you know this girl? This is a girl that my wife went to school with like a long time ago. So like my wife went to school with her, and you know she she went to school with her, but like, and so she was kind of like a really old friend that my wife didn't know that well. So like she knew her like a decade before that in school, and then just never saw her again. And then she was moving out to Houston, and so they kind of linked up back up that way. They like messaged each other, and. But again, when you look back at the whole thing, you can kind of see the signs that like this girl was just looking for, she was just trying to get paid. Unfortunately. Yeah, and Carol's a good person. Like she just wants to help people, and. All right, so we got C earnings coming out in about 4 minutes, guys. We've got Citigroup earnings coming out, and this is a big release too. Honestly, Citigroup's one of the big four. We're gonna put Citi up right here in the middle. Citi currently at 48.70s. 48.70s. The expectational numbers for Citigroup are for $1.66 EPS on 20.08 billion in sales. So $1.66 EPS on 20.08 billion in sales. Yeah. I mean, it could have been tragic. Honestly, she ended up, like, whatever we found out, she ended up just banning us or blocking us from every social media thing that we had. And the reason she did it was because she knew that we knew who she was and like what she was doing. And like, if she had another dude, she was hoping that we wouldn't message whoever it was and be like, hey, this is what this person does. Which is probably pretty, she needed to do that because honestly, I might have at that point. I was being petty after all that. Like, you know, and so I might have, because honestly, in my mind, it's like, hey, I'm looking out for whoever she ends up finding again, because again, her behavior is very predatory. But she ended up getting married to some other guy who, unfortunately, kind of really is kind of the kind of chick people make movies about, man. Um, she didn't cancel me. I didn't want to have anything to do with her. I'd rather it be this way. I'd rather just not have any contact with her, but so far, I'm glad I bought up the bank stocks on the drop. Yeah. Will Tesla rally for strong retail sales data? Maybe. I don't know. It could go. I think it could go either way here. I think high data could be positive. Low data could be positive. There's here comes Citigroup in about a minute here. Let me make sure it's not out yet. Um, so CFO of BLK says that the headcount is expected to be broadly flat in 23. Cost of rate hikes is now materializing, including with shocks to regional banks in their earnings call. She's not really super pretty, DD, honestly. She wasn't like a super attractive female, you know. No offense. I mean, like I said, different strokes. She was kind of a... She was pretty short. She was like 5'3", Caucasian woman, you know. Like, just not super pretty, you know. I'm not going to be specific, but I don't think I need to be. Not in my opinion, at least. Not conventionally. All right, guys. Here goes Citigroup right now. So Citigroup should be dropping their numbers right around now. All right, so there's 8 o'clock. Citigroup did post results. So Citigroup is out with their numbers. Citigroup's out with their numbers, waiting for the actual numbers to show up here. But Citigroup reacting positively here. Looks like maybe a beat as well, man. Look at Citigroup fly. 49.30s here, 49.50s, 49.60 for Citigroup. Huge rip for Citi. Looks like the earnings were positive. Just Citigroup just tapped 49.60 and then it completely retraced back down here. Look at that. All right, Citigroup EPS was 219 versus 166 expected. Way better than expected EPS for Citi. Way better than expected. Up to 49.20s for Citigroup. Huge rip. First quarter revenue was 21.4 billion. So yeah, basically Citigroup beat EPS 219 versus 166. Rev was 21.4 versus 20.08. So way better than expected numbers here for Citigroup, and it is pushing up over 49s. Moving towards 50 right now, dragging the SPY up with it. You can see the SPY head up to 413.30s. But yeah, Citigroup. Saj, listen, man. I'm not going to say you were wrong, but I mean, you were wrong, sir. Again, it's one of the reasons, like, look here, I'm going to put the Citigroup numbers up in chat right here. We also have about 30 minutes before the actual data comes out. But here's Citigroup right here. Better than expected on both metrics here. And still pushing up. Again, we'll see if it holds. Let's see if you're right, Saj. Hey, it's starting to turn for you, bro. I think one of the factors here is that earnings, like Citi's already up so much from earnings. Like, so like to put it into perspective, guys, Citi is up this whole amount from earnings. So Citi has pushed up that much already. So yeah, it's something where it's already pretty extended up there from bank sympathy. And it did beat. Starting to turn. Back at the 200 EMA. So Citigroup back at 200 EMA. Citigroup revenue up 12% to 21.5. Hey, maybe you were right, Saj. Let's see, bro. Gap fill for Citi just went all the way back down to that previous closing price. And again, I'm guessing this is just due to extension on the upside. It's not a pump and dump. Pump and dumps are not this. Charts definitely lie. Sash. So charts certainly lie. You know, because again, a chart is based off of probabilities, which can go any way. You know, it doesn't necessarily have to be right. Like my point is, it could be the best technical pattern in the world, and the stock or whatever it is could just do the opposite of what's expected. You know. Look at the SPY rip up. SPY back up to 413.50s here. WFC at 40.60s. Well, I mean, chart itself doesn't lie, but patterns certainly do, I guess is what I'm trying to say. Charts don't lie because charts are just data. That's true, Fred. I agree with you on that point. I guess what I was trying to say is patterns certainly lie. Because every pattern doesn't work. Every pattern doesn't follow through. It doesn't fulfill every technical pattern. And so I guess that's my point. Not necessarily that charts lie, but patterns certainly do. 24 minutes until retail sales data. Again, Citigroup bounced right back, basically flat from this earnings report. All right, guys. So Citigroup neutral here. We still got about 23 minutes. Again, looking at our poll numbers, we asked people, does the market react well to higher retail sales? 65% of people said yes. 35% of people said no. Be okay. Going to drag everything down with it today, maybe. Wells Fargo popping up. SPY trying to go green on the day here. So again, the SPY is up so much yesterday. Like, here's the thing to understand is that like the SPY is up huge yesterday. Like, look at the SPY's price action yesterday. Like, look at how much the market went up. So like, look at the SPY here. This is a huge move on the SPY. It went up from 409 to 414s. Basically broke highs right before the closing bell and then gapped down a little bit, which is to be expected, I think, because of so much upward movement yesterday. So now with retail sales coming out, again, core retail sales are expected to show up at, let's see what they're expected to show up. So core retail sales expected to show up at minus 0.3%, minus 0.3% for core retail sales. Regular retail sales minus 0.4%. And I guess, again, I'm going to ask this again. Does higher retail sales data mean positive market reaction? I don't know. I really don't know if it does or not. We'll see. Citigroup kind of flat from the report, down a little bit, but it was already up so much from just broad bank sympathy and momentum. A lot of people bought the dip, I guess is the point. A lot of people bought up Citigroup in anticipation of their earnings release because every other bank reacted well, with JP Morgan, Wells Fargo, BOK, Bank of America. They all moved up huge from all these bank earnings that we had this morning, which is dragging the market back up. The market is now technically green on the day from all of this. So I guess the point is, like, Citigroup's not going to go up forever. Eventually it could turn, and I think that's kind of what we're seeing now. All right, guys. So sales good because of higher interest rates? Maybe. Haven't heard anything from Ford in a while. Ford's still at 1250 though. Still pretty high. Ford's still been moving up. All right, Citigroup started to judge back up or started to run back up a little bit. Uh, all right, team. So we still got time. All right, so look at the SPY rip here. So SPY moving back up. Let's see what's dragging the market back up. I'm looking at Apple. No, it's not Apple. Microsoft. I'm surprised Microsoft's not up more with all the AI hype going on. But look at the SPY rip. What is the market ripping up? Is it other banks here? Let's see, BAC. Yeah, Bank of America is what it could be. Bank of America's flying up. BOK hadn't really moved that much, but Citigroup is choppy. Oh, what are the other banks? JP Morgan. JP Morgan's moving up, so maybe just bank earnings and momentum causing it to go up. Oh, PNC, yeah, PNC Pinnacle. Pinnacle's had one of the more underwhelming reactions to all of this stuff. It's actually kind of close to flat today, despite all the other big bank numbers. I think PNC had mixed results, if I remember correctly, but I'm not 100% sure. I'll have to go back and check to see what they showed up as. All right, but yeah, guys, we got about 17 minutes. SPY Green, Citigroup started to come back, WFC. All right, team. SPY's still ripping up, almost up to 414s. Citigroup starting to finally dip down, but it's kind of been in this move between the volume weighted average price and the 200 EMA. All right, guys. It's better high, lower, whatever crypto movement. Are you holding any bank stocks? Not really. I think there's too much risk in banks. I'm holding I think I have a couple in long term, but it's not really holding anything for swing trading. Wells Fargo just broke highs again here, guys. Wells Fargo, WFC just ripped up over highs again. No, this is futures and stocks. This is stocks right now, but we trade futures too. SPY pulling back down to 413.70s here. WFC, man, just flying up. Wells Fargo, the clear winner of today's earnings reports. Again, we got look at JP Morgan here as well. JP Morgan's up big too. So Wells Fargo, JP, the two biggest, releases. Are you taking a pre-news long on the E-mini? No, I don't ever buy anything ahead of economic releases. It's just gamble. It's kind of coin flip in nature. Again, it's just kind of one of those things that there's not really a huge edge in terms of like buying up stuff ahead of these releases because nobody really knows what's going to happen here. Like nobody knows if these things are going to go up, down, or sideways, especially from retail sales, which is kind of a more nuanced release where like higher numbers could be a positive, could evoke a positive response, and lower numbers could evoke a positive response. So again, we really don't know what kind of move we're going to get here from any of this stuff. So taking a huge position, or any position for that matter, ahead of these releases is just a gamble. And it's something that if you're struggling, especially, like, don't gamble. Like there's a lot of gamblers in the market that are just kind of, if they weren't doing this, they put it all on red on roulette or something. But in poker, there's a term, it's called plus EV. And what it means is you need to get in place that your edge is strong. There's certain plays in poker as well as in trading that are not considered what we call plus EV, which is plus expected value. What it means is that if you take that same trade consistently, long term, are you going to make money with it over the long term, regardless of what happens in the short term? And it's definitely more related to poker. But in trading, the same concept needs to be there, where you need to look at a strategy, like buying up something ahead of big economic releases. And you need to say, hey, does this have a true long-term edge in markets? regardless of what we get on this individual release. And if the answer is no, don't take the trade. That's a gamble. You're just gambling if you take those trades. You don't know what's going to happen. You're just kind of looking for a rush and butterflies in your stomach. But the reality of it is there's no edge, and it's just wasting time, buying power, commission, energy, stress, emotions. Like, just be smart, guys. Like, don't gamble away your money on, stuff. If anything, I think it's easier to wait for the release to happen and then maybe take a trade. But betting money big on some economic release before the release comes out, basically trying to guess what the release is going to be, is not a long-term profitable play, unless you got insider information, which in my opinion is most of us, if not all of us, don't. Yeah, for sure, Cal. I mean, that's true. So yeah, you can buy it if you're planning on holding it long term, sure. But I mean, in that situation, what's the point? I guess, I guess you could buy it, and if it goes against you, hold it long term. If it goes in your favor, sell it. But again, what's the point? All right, guys, we got about 9 minutes, 8 minutes actually. Oh, 9 minutes. So we got about 9 minutes here before the data release here. 9 minutes. PNC has actually bounced back a solid about. Again, JP Morgan up big. Wells Fargo a big. SPY green on the day as well, up to about 414s, a little bit underneath it. Make money in what? What's your best stock for long term? Well, number one, I don't know what the best stock for long term is. All I can do is guess. What I like, my personal preference, and again, I have no idea what the best stock long term is. So do not copy me. I might have no idea what I'm talking about. I might be wildly wrong about everything. So don't copy me. Not an investment professional. Not liable if you lose money. Genuinely no idea what the market's going to do. But with that said and out the way, what I like long term is Disney, Apple, Amazon to a certain extent, although the PE ratio is a little bit high there. Like long term, Disney, Apple, Amazon, Walmart, maybe Target, those are ones that I like, but it depends on the objectively. It depends on the weakness or strength of those stocks on a short-term basis. That influences whether I buy it up or not. BLK data's been out. It's been out for the last hour or two. BLK data's out already. They might have their earnings call, but BLK data's already out. BLK posted 793 EPS versus 773 estimates. Sales missed expectations at 4.24 billion versus 4.25 billion estimates. So a decent beat on EPS, a slight miss on sales for BLK. We'll put the earnings up on screen. So the data's already out there. And again, a lot of you guys don't understand data, it seems. But what happens with earnings, guys, is yeah, 70. We're not going to promote ourselves here in the chat room, and that's not the way you grow on YouTube or get stuff, to be honest, man. Anyways, but yeah, BLK data is out. A lot of people don't understand it. The reality of it is, data comes out. BlackRock put out their data like early this morning at like 6 a.m. And then generally like an hour after that, or 1 to 2 hours after that, BLK will then do their earnings call. But their earnings call is just a review of their earnings. The actual earnings data comes out an hour or two before that, most of the time. Same thing with like the afternoon releases as well. Yeah, all good. Disney is like a slug. It doesn't move. Well, I think Disney's down a lot over the last couple of years. But Disney has gone from, in the last 30 years, or the last 20 years, Disney has appreciated about 3.5x in the last 20 years. So that's better than the S&P 500. So Disney's leading the S&P 500 in that regard. S&P 500 is about 2.5x over the last 20 years. Gold has 4x over the last 20 years. Disney has 3.5x over the last 20. So Disney is not a slug. It might be sluggish over the last year, but the whole market is sluggish over the last year. If you look at a daily chart, it's pretty sideways looking chart over the last year, you know. So it just depends on what you're looking at. Okay, if you're joking, I don't know. Anytime I see anybody promote themselves, I usually just delete it or ban it. If it's sarcasm or something, my bad. All right, guys. Retail sales data, core retail sales data coming out in about 4 minutes, guys. 4 minutes. We are going to throw it in sub-only mode. So help us hit those levels that we're looking for here. So we are in sub-only mode. So again, what we do here is we offer a free community of trading and traders. We don't sell a course. We don't sell a service. We don't claim to be experts. We don't act like gurus. We put everything out there for free. And we cover all the major economic data like CPI, retail sales, jobless claims, PPI, Fed rate hike decisions and press conferences, Jerome Powell speeches. We cover, big earnings, Apple, Disney, Amazon earnings, and their earnings call. We'll stream the whole earnings call live. So this is your one-stop shop for economic data. We cover it quickly. So if you haven't already, hit the sub button, hit the notification bell. We are going to get everything ready so we can watch this stuff. And be ready, guys. Today is the 14th. It's Friday. Again, core retail sales expected at minus 0.3%. Minus 0.3%. Will that come in higher or lower than expected? Let me know what you guys think. You can vote on our poll as well. We got our poll going live too. I'm not going to give up the sources. Okay, I got you. 70. I see. Yeah, sorry. All right, guys. Again, let me know what you guys think. We got over 1,000 people here. So hey, hit the sub button, hit the notification bell. Data coming out pretty soon. About 2 minutes. Minus 0.4% is what's expected for retail sales. Core is minus 0.3%. Yeah, definitely top three. All right, market's green on the day. Citigroup bouncing back a little bit. We're going to put the dollar index up with the retail sales data here as well. So here's the Dixie. Here's Tesla. We'll put the Dixie up. We'll put Bitcoin up here as well. So here's Bitcoin. Bitcoin on about 31K. There's the SPY. There is the dollar index. All right, guys, so let's get ready. We got about a minute left. This timer's a little bit off, so we're going to pause it and exit out. We got about a minute left, a little bit over a minute, but. What's up, Ed? Not a comedy channel? Well, I mean, we're definitely the top 3 comedy channels in the world right now. But your joke was subtle, so I didn't pick it up because so it's all good. Not mad at you. I wouldn't have deleted it if I knew you were being sarcastic, so it's all good, man. I don't know, guys. All right, data about to come out. Let's do this. 20 seconds. 20 seconds. Again, core is expected at minus 0.3. Base is expected at minus 0.4. All right, here's the data released right now. 5, 4, 3, 2, 1. All right. Import-export prices came in at minus 0.3%. Retail sales came in at minus 1%, guys. Minus 1% for retail sales. Core retail sales came in at minus 0.8%. So both of them were much lower than expected. Much lower than expected retail sales data. Again, base retail sales came in at minus 1% versus minus 0.4% expected. Core retail sales came in at minus 0.8% versus minus 0.3% expected. So both of them came in lower than expected here, guys, for retail sales data. Again, lower than expected. Again, core retail sales came in at minus 0.8% versus minus 0.3% expected. We'll put this data up on screen. Base retail sales came in at put this up on screen. And then we'll let you. Here's the core data right here. Again, choppy from this report. Market's kind of choppy. And then base retail sales came in at 1% versus minus 0.4%. Let me fix this real quick. Here's the retail sales numbers here, guys. So again, minus 1% versus minus 0.4% expected. Market's not loving this. Again, I thought we might get reactions like this. Remember, guys, I thought we might get I thought we might get something where, or no, well, this was actually opposite to what I expected. I thought if it came in lower than expected, it would make the market go up. And it's still a little bit early yet. We haven't really got the full reaction to it, but lower than expected all the way around. Again, base retail sales came in at minus 1 versus 0.4, minus 0.4. Core retail sales came in at minus 0.8 versus minus 0.3% expected. So lower than expected all the way around here. And again, the market's pretty flat from this. You know, we haven't had like some huge reaction here so far. Dollar index shot up. But the market's starting to reel back up as well here, team. So, you know, initially we get a downward response. The dollar index moved up. But we're pretty flat right now. We're actually a little bit green, I think, from this report. Yeah, again, pretty quickly, hit that subscribe button, guys. We cover this data fast here. And again, if you want to help support the channel, Top Step has a 25% off sale going on right now. There's no PDT in futures, and that's what you can trade on Top Step. You can day trade essentially the SPY or the S&P 500 in futures, which is what moves from these economic releases. You can see the SPY on the left here. You can basically trade that in futures on Top Step. And there's no PDT in futures, which is the big edge. So you can day trade, short it, no PDT rule. Top Step has a 25% off sale going on right now. The reason they have a 25% off sale is because they're now offering express funded accounts where you can earn and trade in up to 3 of them. Where you can test strategies, learn what works best, have one strategy that's doing well. You can connect a trade copier and scale your profit. You can only have 1 live funded account, but the express funded accounts, you can have up to 3 at a time here. 3 at a time. You get 25% off. The base package on Top Step is like 120 something right now if you use my link, or 130 if you use my link. And again, they give you a demo. They test your profitability. If you can pass their profitability test, they fund you between 50 grand up to 150K with a 90% split. So it's the best of both worlds. To where if you lose, you're only down 130 bucks or whatever it is. If you pass it, you still keep 90% of your profit once you're funded. And so it's a great way to test your skill. And if you're good enough, potentially get funded. Check it out. Here's the link. Great way to get around the PDT rule, as well as great way to help support the channel. And there's a 25% off sale going on right now. I accidentally said 26%, but let me fix that real quick. But yeah, 25% off sale going on right now. Let me fix this. But yeah, overall market's turning. Dollar index still moving up. There's the link in the chat. There's also a link in the description. But yeah, market's turning here. Retail sales lower than expected. Sideways response so far, but the Dixie here is moving up. So the dollar index is moving up big. And I don't necessarily know if that's a bad thing per se, because of everybody worried about the dollar and expecting weakness. I'm actually the opposite of me, Melissa. I actually think the opposite. I think swing trading for me personally has a much bigger edge than day trading myself. And again, Top Step's a sponsor of mine, so I'm biased in Top Step's favor. But if you're going to day trade, I think funded account programs are a good way to keep your risk small, but still have a lot of the benefits of day trading and potential rewards, but smaller risk. I am green on the year swing trading. I am much better at swing trading than I am day trading. But again, I'm not trying to be a guru in anything. So I day trade the opening bell. We also swing trade. We invest. So I mean, we do a little bit of everything, but we're just an economical resource channel. So. But market's starting to break down under 413s here, under 413s. But yeah, I think day trading, I'll put it this way. I think day trading is going to be the hardest thing for most traders over swing trading, over investing. The biggest edge in the markets is investing, like long-term value investing, putting money in, letting it sit for 5-10 years. Plus, you're almost guaranteed to make money if you diversify well enough into specifically blue chips. And I think day trading, a large majority of people lose money. It's one of the reasons we push funded account programs is because it's frankly a lot cheaper to lose a funded account program as a trader than it is to put up 10K and risk that, or 25K plus if you try to do it in stocks. And so, 95% of day traders are going to lose money. So I think that's why funded account programs work, because you just have less risk. They're cheaper and you have less risk and you still get a lot of benefits. Yeah, make sure y'all hit the live button next to the play button to make sure you're called up on stream. A lot of y'all might be delayed. We already covered bank earnings, James. Michael, most of the banks are out already. Thanks, John, for all you do. My only stock YouTuber I watch. Hey, thank you, Fu. I appreciate it, man. All right, so Dixie popped up big. The SPY ended up turning back down, but it's not down huge. It's down to 413s. And again, to put it into perspective, the market's just up big over the last few days. Look how much the market's up right now. So market's up big over the last couple of days. We'll see if it continues this strength or everything that's going on, but the market's just up big. And market's starting to flush back down. So yeah, again, lower retail sales data is making the market drop. So maybe the market's more so fearing inflation or fearing a recession with the bank earnings coming in favorable. So market's pretty neutral from this report here. Again, we'll see if the dollar index moves back up and that drags everything else up. There's a little bit of a dollar index move. Why is the dollar going up? Well, there's generally an inverse correlation between the dollar index and the market itself. So like usually the dollar index is going to move up with the market or move against the market. So like if the S&P 500 moves up, the dollar index generally moves down. If the S&P 500 moves down, the dollar index generally moves up. And so the Dixie is up because the dollar index is down. And now the market's starting to rebound back. And maybe this might be something where higher retail sales data means the market rips up, or lower retail sales data means the market rips up. In that situation, it means the market's still fearing inflation. And, maybe that's the case. I really don't know. I know the market is pretty flat right now from this release. And I can see the dollar index starting to fall down some. But honestly, we still got a lot of time here. If you want to check out another one of my sponsors, guys, this sponsor is called Chart Prime, and Chart Prime is really dope, dude. I think Chart Prime is really, really cool. What Chart Prime is a trading view indicator service. So you can use it in stocks, you can use it in crypto, you can use it in Forex, you can use it in futures. Pretty cool service here, man. Pretty cool service. Like, so let's zoom in and look at yesterday's action here, and you'll kind of see how powerful this is. So like, here's yesterday. Here's yesterday's price action. All right, and again, this is called Chart Prime, trading view indicator service. Here's yesterday, and so if you look at this, they give you custom alerts and signals. So that's how you reversal signals. They'll show you bearish and bullish candlestick patterns, all that cool stuff. It's very useful in that way. And again, I can't guarantee you're going to make money. They're a sponsor of mine, and so I'm not guaranteeing anything. They're a sponsor of mine. I'm certainly biased in their favor. But if I can't fake what I'm about to show you. So again, here's yesterday's pre-market session. Look, possible reversal up and 2 bullish engulfing candles. Huge bounce over the next like 30 minutes. Possible reversal down literally at the very top. Nice drops over the next like 15 minutes or so. Possible reversal up signal at the opening bell. Nice little bounce up to like the next hour. This one was wrong, maybe slightly. And then again, bearish engulfing candle literally right at the very top. Nice drops after that. Again, so it was literally, 75% accurate yesterday at the open. We keep going back here. Look at this. So again, you look at all of yesterday's price action. Possible reversal down and bearish engulfing candle drops. Possible reversal down signal here drops, and you can use it on any time frame. I also like this is on a 1 minute time frame, guys, but you can use it realistically on any time frame here. So if I put up a 2-hour chart where I can use it on a 2-hour chart and use it to find momentum and patterns this way. Look, reversal down drops, reversal up bounce. Look at this, literally called the top here. And so look, reversal signal here. We got drops over the next like couple days. Reversal down, drops over days. Each of these candlesticks represents an hour. You can use them on a daily chart too. So here's a daily chart. And I've never really tried using it on a daily chart, but you can use them on a daily chart as well. So again, you can use them on any time frame really. And yeah, check this out. Not bad. Possible reversal up, bounce. Possible reversal down, drop. Reversal up here, bounce. This one was wrong. Reversal up, bounce. Reversal down, drop. Reversal down, drop. So pretty accurate. That one was wrong. Reversal up, bounce. Reversal down, drop. Reversal down, drop. Reversal up, bounce. And so again, I can't fake what I'm showing you. This is $35 a month too, so very cheap, very cheap. And again, you can use it in stocks, crypto, Forex, futures. It's called Chart Prime. Check it out. They're a sponsor of mine, so I'm biased in their favor again. But for what you get, I think it's pretty cheap. And there's a ton of other stuff with them. You can use chart patterns and signals and all that good stuff. There's the link. They show up after each candlestick in real time. Yeah, we're not going to cover the Fed Waller speech. All right, guys. So again, market's moving up a little bit, kind of choppy from this report here. The dollar index is still heading up though, and we're still right underneath the previous closing price. All right, look at the Dixie start to move up, maybe testing highs here. So again, SPY choppy. Bitcoin didn't really have much of a reaction, kind of an underreaction. And then look at the dollar index still pump. Well, it shows up after each candlestick, basically. So like once you get the engulfing pattern, it shows up. They do not repaint. So it's like, I guess the point is like they do not show up like they don't show up way afterwards. They show up in real time. They don't repaint. So they don't correct them to look more accurate than they are. Those are the actual signals that showed up in real time. Yeah, what's up, Tyler? But again, I can't guarantee you're going to make money. Nobody can. They are a sponsor of mine. I'm certainly biased in their favor, but can be genuinely useful in my opinion. All right, so we are in a futures contract attacking, this weakness here. We're gonna go ahead and cut that. So we just made about $300 or $400. Let me see how much we just made. But I wanted to get into a short because I thought that we might reject at the previous closing price, which we did here on the SPY. So I took a couple contracts of the regular. Yeah, we're up a couple hundred. $200. Not bad. First trade of the day in futures, so we'll take that. All right, look at the SPY really start to break here. So it looks like we could have held our short a little bit longer, but it's all good. What's your daily bias? Yeah, Chart Prime has free classes too, where there's just a lot of cool stuff that they offer. Honestly, Discord classes, they'll like teach you how to use the indicators too. And what I showed you is just like a very small percentage of what they offer. They also show you like chart patterns, so like rising wedges. They show you oscillators that are really powerful. They show you like their own kind of version of the VWAP, which can be powerful too. Look at the dollar index rip up here. So dollar index breaking up. It's at 101.20s here, guys. 101.20. So big move here for this. Bitcoin falling down a little bit on this with the market itself. But again, I thought the market was just a little bit too extended there, in my personal opinion. Like I thought the market was just up a little bit too much. I've been saying this for days. I get a little pop, a little bounce now. Worst stock market crash ever. Hey, I'm trying to tell you guys, bro. Listen, man, who's been sitting here for months telling you that the market was not going to crash, guys? I mean, listen, I'm not trying to toot my own horn, but I'm a tootin' over here, okay? Oh, man. You know what's the funny part is like when you're right and people get mad at you for being right. Cheers, you guys, with my LSU mug here. Cheers to you guys. Because I'm going to sip on the victory liquid right here. Cheers to you guys. All right, guys. Market's bouncing up a little bit. Part of me wants to short this little pop, but I'm gonna wait. Again, we made a little bit already, and so I'm just gonna chill and wait right now. You have some key insights. Your analysis is very good. I thank you, Kevin. Why are you not watching the Fed Waller speech right now? I mean, I can try to watch it. What's today? Today is the 14th. All right. Yeah, I'll put it up. We'll watch it, but I'm not gonna like.
Deposit flows stabilize across banks, and as a result, the combined usage of the discount window and the new program has moderated. Both tools remain ready and able to provide liquidity to the system, enabling banks to support households and businesses. This success allowed us to focus on our macroeconomic objectives of price stability and maximum employment when setting the policy rate at our FOMC March meeting. Against this backdrop, the FOMC raised the policy rate 25 basis points without causing significant stress to the financial system. To date, that decision we made has been validated. That said, it is unclear to what extent stress in the banking system will weigh on economic activity. If banks feel they need to adjust their business models or are uncertain about the stability of their deposit base or the momentum of the economy, they may tighten credit conditions and curtail lending. Tighter financial conditions or other lending conditions would likely cause households to reduce spending, businesses to pull back on investment and hiring, all of which will help move supply and demand back into better balance and help bring our inflation down toward our 2% target. It is important to note that there were indications of tightening credit conditions this year before the problems emerged in the banking system. In the board's January Senior Loan Officer Opinion Survey, bank officials reported higher interest rates for loans, tighter lending standards relative to the end of last year. These loan officers also said they expected to continue tightening lending standards over the course of 2023. They cited an expected deterioration in collateral value, a reduction in risk tolerance, and a deterioration in the credit quality of bank portfolios, which mirror the factors that contributed to the recent turmoil in banking. The failure of SVB and Signature Bank and related developments might have solidified and pulled forward factors that were already working to tighten credit conditions. Or it may be that credit conditions will now be even tighter than they would have been. I say this because all else equal, a significant tightening of credit conditions could obviate the need for some additional monetary policy tightening. But making such a judgment is difficult, especially in real time. Now, regarding the economic outlook, the data in hand for the first quarter of 2023 continue to surprise me, with stronger growth and job creation than I expected late last year. The FOMC has significantly raised the target range for the federal funds rate to dampen aggregate demand, but U.S. consumers and businesses are showing remarkable resilience. I mean, if you told me we'd raise the Fed funds rate 500 basis points in 1 year and nothing appears to be happening, that would just be shocking. The Atlanta Fed's gross domestic product, or GDP growth tracker, which reflects the most up-to-date data, estimates that GDP grew by 2.2% in the first quarter, in line with many private sector estimates and higher than most estimates of potential growth provided by FOMC participants. This growth would mean that so far, tighter monetary policy and credit conditions are not doing that much to restrain aggregate demand. Some data for March point to some moderation in economic activity. The Institute for Supply Management's ISM survey of purchasing managers indicated that manufacturing contracted in March, and the ISM survey related to non-manufacturing indicated that activity outside the manufacturing sector decelerated in March to a more modest pace. And just a few minutes ago, data on retail sales for March was released, which will give us some idea of how consumer demand is holding up. For this and other sectors of the economy, I believe that demand will eventually moderate because of higher interest rates. The solid performance of the economy through the first quarter in part reflects a very tight labor market, which I'm sure you're all dealing with. The jobs report for March showed once again that we have a very strong labor market with 236,000 jobs created. and the unemployment rate falling to 3.5%. While still showing signs of strong growth, job creation did cool a bit from the hot readings we got in January and February. And we did get some encouraging news that the labor market is rebalancing. First, labor participation increased for the fourth month in a row. So labor supply seems to be slowly increasing. Some of that's resulting from immigration increases. Second, the report on February job openings showed that job vacancies fell 632,000 to 9.9 million, and the vacancy rate declined to 6%. So job vacancies have fallen 14% since their peak last March. So the job openings data, along with the jobs report, show that labor demand has been falling, which is more evident in declining vacancies than in rising layoffs. Despite all the discussion about layoffs, for the country as a whole, the involuntary separation rate has not changed. So as the labor market continues to rebalance, this should help bring inflation down by reducing wage pressures.
We'll see.
Now let's talk about what these developments mean for inflation. Inflation moderated in the second half of 2022, but that progress more or less has stalled toward the end of the year. And inflation remains far above our target of 2%. On April 12th, we got the Consumer Price Index, or CPI, inflation data for March. And it was another month of mixed news. Overall, CPI inflation rose very little, with only a 0.05, only economists go out to like the second decimal point, increase from the previous month due to sharp declines in food and energy prices, with year-over-year increase falling to 5% from a peak of 9% last summer. Core inflation, which strips out food and energy prices and is a good guide to future inflation, that measure came in at about 0.4% in March from the previous month, which translates to an annual rate of 4.6% if it were to persist. It was the fourth month in a row with core inflation at 0.4% monthly or higher. Since December of 2021, core inflation has just basically moved sideways with no apparent downward movement. So despite some encouraging news on a slowing in housing cost, core inflation does not show much improvement and remains far above our 2% target. Whether you measure inflation using CPI or the Fed's preferred measure of personal consumption expenditures, or PCE, it is still much too high, and so my job is not done. I interpret these data as indicating that we haven't made much progress on our inflation goal, which leaves me at about the same place on the economic outlook that I was at the last FOMC meeting, and on the same path for monetary policy. Now, because financial conditions have significantly tightened, the labor market continues to be strong and quite tight, and inflation is far above target, monetary policy needs to be tightened further. How much further will depend on incoming data on inflation, the real economy, and the extent of these tightening credit conditions. Another implication for my outlook and the slow progress lately is that as for now, monetary policy will need to remain tight for a substantial period of time, and much longer than markets are currently anticipating. But there are still more than 2 weeks until the next FOMC meeting, and I stand ready to adjust my stance based on what we learn about the economy, including about lending conditions, other data such as those on the housing sector, personal income, and surveys that provide managers' views of economic conditions in April will come over in the next 2 weeks. So I would welcome any signs of moderating demand, but until they appear, and I see inflation moving meaningfully and persistently down toward our 2% target, I believe there's still work to do. Thank you, Kathy. I'm happy to take your questions.
The questions are really going to be what influences the market, because he's going to get some heavy questions.
Prepared questions for you, Chris.
Go ahead. Ask away.
Now, you spoke about how you will be watching financial conditions. It's a normal thing for you to do, of course. What types of things do you look for? And what do you look at when you're evaluating financial conditions?
Right. So the main point of our policy over the last year has been to try to tighten credit conditions, make lending tougher, reduce total demand to put downward pressure on prices. That's what we're trying to do, plain and simple. So we're trying to tighten credit conditions. You can do that one of two ways. You can raise the price of credit, which is the interest rate, or the terms of the credit, maturity, your loan to value, other types of underwriting criteria. We've been focusing on the price of credit. What we're now seeing is the financial sector is starting to adjust the terms of credit, which you all may face at some point. So that's what we're really going to kind of look for. We're going to look about changes in risk tolerance for banks through the senior loan officer survey, terms of credit, loan to value. These are all things that we can see whether they're starting to tighten credit conditions or not. Whether you're kind of raising your tolerance for who's going to get cut off, your prime borrowers, maybe less prime borrowers. Those are the things we're going to be looking at to see, particularly if we see a sudden spike or a very abrupt adjustment in these. Because we already saw kind of a trend tightening as you go up, tightening, getting more severe. But if it suddenly accelerates, then it will have a much stronger effect on the economy.
And directly impact us, as we all know in our industry. Our customers are really subject to this tightening. Another question. Can you talk a bit about how tighter financial conditions are related to your views of appropriate monetary policy?
Right. So up until March 10th, when SVB failed, the data that was coming in January and February was just extremely hot. The economy was not showing any signs of slowing down. So at that time, I thought that our kind of terminal interest rate, like where we might think about stopping, was going to have to be much higher than what we projected in December, which was 5 1/8 in terms of the interest rate. So I started thinking we were going to have to go up to 5 1/2, 5 1/4, or higher to deal with it. Once the SVB situation happened and credit conditions started to tighten, that takes some of the work off of me. Because if the financial market tightens the non-price credit, I don't have to do as much on the price side to tighten credit. So what that did is it kind of kept me from pushing up my terminal rate and kept it where it was in December. So we're going to let some of this is kind of a silver lining in a bad cloud, but we're going to let some of this tightening do the work for us so that we don't potentially have to raise rates quite as much as I thought we would have to back in February.
It's encouraging that you continue to reevaluate everything after economic data comes in. Some people, don't get to see that part of your decisions.
Yeah. Yeah, we live and die by the data.
Yep. Super data. Yes. All right. You mentioned that inflation is still too high. And so why is it taking so long to get to the 2% target?
Yeah, so inflation's been kind of funny over the last 15 years. During the 2010s to 2020, we had a 2% target and inflation was running consistently below. And it's always this funny thing in economics. If there's one thing a central banker should know how to do, it's cause inflation. But we couldn't seem to get inflation to go from like 1.5 to 2. It just stayed there for 10 years. We couldn't move it. So that stickiness in inflation was a puzzle to all the economics profession. Given everything we were trying to do to stimulate demand, get the economy going, it still just didn't seem to have any impact on inflation. And then we got a big surprise. Inflation went up. For a while, all the economics, all the theory, everything suggested that this would be, I'm going to say the dreaded word, transitory. And then unfortunately, it didn't turn out that way. So inflation exploded on us really at the end of 2021. We had to do an abrupt adjustment in our policy to tighten at a much faster rate because inflation was just screaming, as you saw last year in 2022. And it's my job to try to get it down. Put me in there for.
This is Fed Waller.
So we went on a very rapid rate hike to try to bring inflation down. Now we have seen headline go from about 9% down to about 5%. So that is progress. But like I said, core, when you strip out food and energy, a lot of that run up and run down is just food and energy, particularly energy. So it's not really telling you what's going on underneath for kind of all the other goods and services. That's why we look at core. That's why we strip those two categories out. That's everything else in the economy. And that just has not come down. It has stayed right around in December 2021, I believe it was 6%. And right now it's 5.6. So core inflation has just literally gone like this, sideways. We need to get that down to get closer to our 2% target.
Yeah.
So one of the things we do know that's driving this persistent is housing cost, shelter cost. Rents move with a lag because people sign 12-month leases, say for rents, and then they only adjust once a year. But when they adjust, they go up a lot. So you get this lag that a lot of what we saw in housing pressures last spring are just now going to start showing up in prices, new rents, new leases that get signed. So shelter has this persistent component. We all know that. Everybody's fully aware of it. And a good sign we got in the CPI report is that we finally saw, instead of housing shelter costs going up at 0.8% per month, they only went up at 0.5%, 0.5% per month. And we expect that to keep coming down. So that should pull some of the persistence. That's why most of us have inflation coming down to like the 3 to 3.5 range by the end of the year. Some of that persistence from housing will start fading away. And then we'll get inflation a lot closer to our target by the end.
Probably the best explanation I've heard of why it's so stubborn, because it just isn't moving. I mean, it's just sitting there. All right. So after months of inflation, and I mentioned this to the other day in a casual conversation, our industry is starting to see some kind of price deflation, especially around commodities. Non-commodity products are still holding, but the commodity prices are starting to drop. Is this consistent with what you're seeing at the macro level? And would you share a broader view on this and what that could mean to us and the general economy?
Yeah, so the pandemic caused a huge shift in spending by households from services to goods. Goods, you got to make stuff, you got to ship stuff, it's got to go on a truck, it's got to go on a plane. So we saw a huge demand for this in the pandemic. Prices exploded for manufactured goods, any durable kind of goods. And then as the pandemic kind of receded, we all anticipated rotation out of goods back into services. That took a lot longer to happen than we imagined. So we were always expecting goods prices, manufacturing good prices. They ran up and that they were going to come somewhat back down. Not maybe all the way back, but come down somewhat. We didn't see that till the end of last year. We were thinking this would happen by the end of 2021, early 2022, but it didn't happen till the end. And in the last couple of months, good prices have started to go back up, not, stay flat or continue to come down. So some of the decline in manufacturing and prices some of that is we fully expected this rotation back into services. When you use terms like revenge travel, that should tell you something, that there's a rotation back to services. And the other big disruption was just supply chains weren't prepared for this kind of massive increase in demand and shipping of all this stuff. So there was a lot of talk about supply chain problems, and that we thought in 2021 that these things would unravel quicker than they did. It just took a lot longer to unravel these supply chains or reorient supply chains to help kind of get goods prices back down. I mean, the thing I learned in the pandemic is I thought all the economies would just kind of power down and then just power back up. But, they didn't happen at the same time. Some would power down, some were still going, this would come up, this one would go down. So every time you reestablish one link in the supply chain, another one would break. And unless they're all connected, it doesn't work. So that's why I think there was a lot of persistence in the supply chain, just because this asynchronous shutting down and opening up of economies around the world. But we are starting to see a lot of the supply chain things unravel. I'd be curious to hear if that's your world. Love to hear comments on what you're seeing. But what we're seeing in the data is, for the most part, we're not hearing a lot of problems on supply chain. So what we're seeing right now is pure demand. People have income, their jobs are good, there's a tight labor market, and that supports demand for goods and services by households. So that's kind of how I see it, but I'd love to hear later your thoughts on it.
Well, since we're at that point, and my next question was around supply chain, would anybody in the audience like to comment on what you're seeing around Chris's question about what you're seeing in supply chain? Because you all live it. We know, because my organization's on that receiving end, but you all have lived the supply chain challenges and whatever you're dealing with today. What are you all seeing? If anybody wants to comment.
Crickets. Somebody must be talking, but I don't hear anything. I don't know, man. I think this is the Fed Waller speech. Market's been pretty neutral in terms of like reactions from this. The retail sales data came out right here, and the market has basically done nothing since then. So retail sales data came out here. Market has gone down and then basically chopped since then. Opening bells at about 20 minutes, guys. So again, we're covering this. We can't hear anything they're saying right now. But yeah, let me know what you guys think about all this in the chat. Yeah, I can't say like that either, Bulldog.
Sure.
I don't know if they realize that we can't hear the audience, but I don't think they do, because right now we're just seeing them, you know.
Mm-hmm.
Yeah, wow. Mm-hmm. Okay. Sure. Yeah. Nobody can hear anything. It's awkward. Anyways, market's not really reacting to this. And again, the market opens up in about 20 minutes. So we'll see if we get a delayed retail sales reaction or bank earnings reaction. That is a dope chair, dude. I do like that chair. Looks like the Beetlejuice chair. So I do like it.
Yeah. So on the first point, where the question was, supply chains have gotten better, but there's still spot shortages of products. That's a great point. I heard that, a year ago that, if you need 100 parts to put something together and you get 99, you still can't ship the product.
Bro, nobody knows what the question was.
During the shortage of vehicles, when they were short chips, at some point the automakers just said, okay, what things in the car do we not need a chip for, and just sell it without some functionality in the car that we normally would have sold it. Those are the kind of trade-offs you start making when you have the problem you just described.
Oh, what problem? We don't know the problem.
This is the tricky part about pricing, right? You negotiate a contract to supply some goods. It takes a while to get there. Prices change dramatically. Somebody either has to, bear the cost if the price isn't right. It's too high. Buyer saying, well, I could have got it lower, or they walk away. Or you have to renegotiate the contract. So I'm not sure exactly how much renegotiation there is in terms of your all contracts or orders, depending on how much it is, whether you have to eat it or the customer has to eat it. That's not my world. That's what I want to talk to you all about. But I mean, that's what I said. That's a similar kind of common problem with leases of any kind, that they're set. Last year, there's a lot of inflation pressure that builds up over the year. They reset higher. And then last year, we saw rents were skyrocketing last summer, but rents have come down. I have to reset my own rent here pretty quick. So yeah, it went up to like 15%. It's come down to 8%, but I was at 0. So I got to go up to 8%. So it's still going to be a shock for me when I get my rent increase. And so that's kind of the issue with all the repricing, is you're still with a lag. You're still going to have to face these higher costs.
I think we have 2 minutes left.
2 minutes, guys. Okay.
Are there any final comments? And if you don't, I have one quick question. It's actually probably won't be quick though.
Fire away.
Okay. What are your views, briefly, on the recent chatter about de-emphasizing the U.S. dollar as the world's reserve currency? We're hearing a lot of noise out there on that.
Yeah, I mean, the thing I always try to stress with the U.S., the reserve currency, the dollar, is this is a voluntary arrangement by trading partners in the world. If you're a German firm trading with a Japanese firm, you price your contract in U.S. dollars. Nobody's forcing you to do that. You're doing that because you want the dollar to be the basis for that trade. So it's always a question of, why do people want that our currency to be basis of a voluntary trade between two other countries? And the reason is we have good rule of law, good property rights, deep and liquid financial markets compared to everybody else on the planet, relatively stable political and policy institutions. And that's why these countries want to use our currency. So I always ask people, if you think the dollar should go down, one of those things has to break. And somebody else has to step up and do it better. My whole 40 years, I've been told, oh, the dollar's going to lose. It's still there. So it's going to be very hard for some country to step in and get Remember, you can always put a gun to somebody's head and say, look, you got to use our currency to do something in our country. Okay. But that doesn't mean people outside your country who are voluntarily going to use your currency to do it. So that's why I personally don't think there's really a serious threat. When the euro came into existence 20 years ago, that's all I heard. The euro is going to take over. The euro is going to knock, not even close. Didn't even come close. So the dollar is still the preeminent currency because people in the world want to use it. And that's why it is.
Well, join me in thanking Dr. Waller for joining us this morning. And thank you, Chris.
All right, Bill. All right, good day for you, Waller. All right, guys. So yeah, let me know what you guys think about that. Yeah, I mean, I agree with them to a certain extent regarding the dollar. I think the dollar is probably fine. I think, I think the dollar is probably fine. But, there are some risks in that regard as well. E-mini breaking down a little bit, but pretty flat from this report. And we're going to get ready to trade at the opening bell also in about 15 minutes or so. The CBDC Fed Now thing, which goes live, I believe, in June or July. Will be an interesting dynamic of all this. Yeah, let me know what you guys think. We're going to put the music back. It's his birthday. And so again, we got a little bit of a neutral trend right now. We don't know if this is going to hold or what's going on with this, but right now we're kind of neutrally moving, I should say. Yeah, do me a favor, hit the subscribe button, right? Guys, bump these numbers up a little bit. These are rookie numbers. Hit the subscribe button, guys. You know you want to. Try it one time. It might feel good. Do it now. Peer pressure. Everybody's doing it. Do it now. Hit the subscribe button. Where's the Dare commercials at? E-mini moving up a little bit. Dollar index is pulling back some. Bitcoin sitting just under 31K. And we are going to be doing a crypto show later on today as well. Oh, man. Ooh. Feels good to stretch. I got one of these standing desks, but the last time I tried to stand this thing up, two of my monitors just crashed to the ground here. So I kind of want to stand up right now and get some stretching done. But I understand there's risks now. Monitors. Yeah, and a big thing to understand is we're about to day trade. But again, I say this many times because it's true. I see a lot of people out there trying to be day trading gurus and selling courses and all that good stuff. And that's cool and fine and all. But I really just want to be a free resource and community of traders. I just want to be a free resource and community of traders. I don't need to be an expert. Honestly, trying to pretend to be an expert causes people to fudge numbers and stuff. And I'd rather just not. I'd rather just be free. Nobody's claiming to be an expert here. Sometimes we're wrong, and we might be wildly wrong about everything and have no idea what we're talking about. But in the end, we're just a resource and community. We don't charge for our content. And that's the big thing I always want is no charging for content. Market's starting to run back up a little bit, I guess, on the dollar comments, but see the E-mini starting to move up. All right, market moving up. All right, guys. So got a little bit of an upward move here. I'm watching the dollar index because the dollar index has honestly been pumping up here. There's not the most obvious correlation between the Dixie right now and the market itself. You can see the dollar index has really been moving up since about 9 a.m. The SPY has been moving up for the most part since about 9 a.m. Not a huge run up though, so there's somewhat of a positive correlation, maybe short term, but a long term negative correlation between the Dixie and the market itself. And right now, there's not much of a correlation that I can see at all. So it'll be interesting to see what happens at the opening bell. We did get into a couple trades already so far today, but you know, we're gonna give it time, and who knows what we're gonna get. Not many experts gloat about being an expert. Yeah. This is the Donald Duck song. Yeah, that's right. All right, guys. 9 minutes or so until the market opens. Yeah, I just think there's enough day trading gurus out there. You know, and it really kind of makes other traders dislike me. Like the fact that I'm out here being like, yo, like you don't need to buy a course. Like it's all like you could probably find whatever content is in that course for free. That makes a lot of traders not like me because I'm attacking their business. And I kind of get it, but you know, again, I think deep down, most of the people selling courses for thousands and thousands of dollars know it's not worth it, and like so they know, but like, you know. Sometimes it's easier to get mad at the messenger than have that type of introspection, you know. Well, I mean, but Corey, at the same time, though, if you look at it objectively, like it's not really our enemies, but it's certainly not like huge, like supporting countries to the U.S. That are not using it. So it's like I guess like Saudi Arabia choosing to not use the dollar, it's not a shock, you know. You know, some of these countries are not the most friendly countries to the United States anyway. And so again, I don't think that's necessarily like a shock. Now, if like a lot of our, you know, friendly countries start doing that, that's a different story. But we're not getting there yet. All right, guys. So yeah, market's very flat right now. Again, we made a couple hundred on Top Step, and now we're just kind of sitting back. Not sure about Tesla bulls are super strong, but at the same time we had price cuts. Yeah. Bro, you know how many times a day you gotta. Yeah, I don't know. I think pressure kills profit. And I think if you're telling everybody you're such a good trader, like you're the best trader ever, and you're selling a course on it, and you got like 5 losing days in a row, people are going to start looking at you like, hey, bro, I thought you said you were the great trader. You know, what happened? You know? And that builds a lot of pressure. It causes people to fudge numbers a little bit more. And I'd rather just not guarantee anything. You know, I'm not even claiming to be a good trader. You know, I might lose every day here. You know what I mean? Like, I don't claim anything. I don't guarantee anything. I might be horrible at trading because none of that matters. Like, people who want to criticize me generally try to act like I'm like a day trading guru expert. And so they can use that to like criticize me. But like, the reality of it is we're not even a day trading channel. Like, we are an economic release channel, and we day trade, but we swing trade as well. We invest, like, if you guys really listen to what I say, what I really think has the biggest edge over any type of market is long-term value investing. Putting your money in blue chip healthy companies or the S&P 500 and just letting it sit for a decade. You're almost guaranteed to make money. But like, that's not the easiest thing to bring views to, because it's easier to tell people that a market crash is imminent, and the market's going to crash today. No, like, I'll put it this way: I saw a lot of YouTubers making videos talking about how a crash was just about to happen right before CPI, right before PPI, and the market would just go straight up afterwards. The market just moving up. SPY is right now at like 413s, so it's like the market just moved straight up. And despite that, they take like a little 413s. Despite that, they'll take like one like small gap down in pre-market after running up huge percentages the previous day, and then they'll isolate that and they'll magnify that, and they'll be like, "Hey, look, the market dropped, 0.25%. See, I was right about my huge crash prediction because the market dropped 0.25%." And you're like, "Y'all get out of here." Crash whisperers is what we call them. But the point is, trading sensationalized, and it's all good. Again, I have no idea what I'm talking about. I might be wildly wrong about anything and everything I say. I'm certainly not guaranteeing to be anything. And you guys should appreciate that. You still claim Baton Rouge, or they got too hood for you? Baton Rouge is my hometown, man. I grew up in Baton Rouge. Do I want to necessarily live there? No, not really. The beard is starting to look Ross's, bro. Dude, this beard is majestic compared to Ross, dude. Y'all know who's the top 3 beards in the game right now. Yeah, I'm definitely top 3 people who have no idea what they're talking about in the world right now. Definitely top 3 for sure. Saj is always right. Didn't Saj say we would go down yesterday? Right? I don't know. Maybe I'm off with that one. But didn't he say we'd drop yesterday? All right, guys. Market's about to open. 2 minutes. Yeah, I'm definitely top three in everything traders in the world right now. Yeah, thank you, Santiago. I appreciate that, brother. Thank you, man. All right, guys, we got about a minute and a half. Yeah, AI stock's been going crazy the last couple of days. I always told you guys I thought AI was solid, but all right, team. Market's about to open up right now. 20 seconds. 20 seconds. All right, guys. All right, here's the market open. Let's see if we get something good. This is the best channel I found. Hey, thank you. I appreciate it. Market's moving up a little bit, but very choppy. I mean, we can see the trend. The trend is obvious. So let's see if that trend continues. Huge rip up on the market, guys. Look at the market pop. We're pulling back. So we're in that trend still. All right, guys. So market pumped up a little bit. Look, you can see we rejected right at that trend line. Will we break out of the trend? I'm going to wait first until we get a break of the trend. We already got a nice little cushion on the day, though. All right, starting to pop up over that trend. Right at the top of the range. We're going to let it calm down a little bit first. All right, so we're consolidating after that break, but still got some time. Rejecting a little bit at the top. All right, just gotta hang it out here, team. We're mostly just flat and consolidating at this point in time, so I'm just not really loving this price action. I gotta just chill. All right, so we got a little pop up over this range finally. Took long enough. Oh, sorry, guys. All right, so we're starting to get some range here. We get a little dip. We'll buy this dip up, but we need a dip first. All right, so we were looking for a dip. We just did get one. So there's no dip yet. Still ripping up though. Look at this move here. SPY ripping up, E-mini ripping up, Bitcoin still moving up. Dollar index starting to come back down some here. So again, we'll buy this dip if we get a decent enough one. That is, we're already up a couple hundred on the day. Here's the P&L so far, but I'd like a little bit more. But ideally, we need a small pullback to attack this uptrend that we got right now. Wait, did I do this on the wrong one? Oh, no, I think I did. Oops. Wrong channel. There we go. All right, again, we need a pullback here, guys. No pullback. We've had 1, 2, 3, 4, 5, 6 green candles in a row. A little bit too much. Yeah, we need that dip. Still no pullback, man. Look at and again, here's the thing. Like the larger move up we get, the larger pullback we need. In all honesty, so like the larger dip or the larger run up we get, the bigger pullback we need, and we're just not getting it yet. All right, still creeping up here. No red candles in sight. Again, we need a larger pullback if we're going to buy up any of this stuff, to be honest. Bitcoin moving up to almost 30.9K here. SPY just pumping up over 414s right now. Over 414s. Still creeping up. Starting to get a little small pullback, but we need a larger one in all honesty here. Again, we got a little doji candle, but nothing really in terms of pullback yet, guys. So just kind of sitting back, trying to be as patient as I can. It's Friday. We did have some economic release come out, but all right, we got a little bit more of a pullback here, but still not big necessarily here. Oh man. All right, so a small pullback here, but if we're gonna have any edge, all right, I'll go ahead and buy this up. I'll buy one contract here and then see if we get a pop. I'm not gonna buy more than this. I might add one more contract to it if it goes in my favor, but we also have to be careful because these are some of the biggest traps I've seen lately in the market where we pull back. It looks like a bull trend, a bull open, and then it just falls all the way back down and turns choppy on the day. So we're going to keep it pretty small. We're pretty flat on this now, slightly green now. Give it time to run up enough for us to profit something from it. All right, so we'll just cut it there. That's good enough. All right, so now we are up about 240 on the day or so. Yeah, about 240. Not bad. Import, please don't tell me to buy. And again, I talked about this yesterday. Even if you're right, pressuring me not to do something or to do something is not the right move. It just creates pressure in the channel where we don't need it. It influences too many other people. Again, I've seen so many people over the last couple of days be like, hey, the market's going to crash, sell, 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 and then the market's ripped up big. And so despite how confident you are in your direction, nobody knows what the market's going to do. And with that said, the market did just pump up from that. But even if it reverses and even if you're right about it, it's just not helpful to pressure people. Import. Oh, Bruce barking. Bruce is definitely top 3 dogs ever. But yeah, market's rebounding. Like I said, we bought that dip. We wanted a decent enough pullback. When I looked at the SPY pullback was strong enough, and there we go. We're testing highs now again. So thus is my point, you know. SPY ripping up, about to test highs. JB, man, how many accounts are you going to create, dude? You know? Sheesh. Market ripped up, broke highs. Well, I'm not going to say it proves my point exactly, but, you know. We should have held it. Honestly, market's flying up. About to hit 515s. I ran across the street to the gas station to get that dip buy done. Hey, congrats, Pawn. Banks are already out, Carlitos. Market's flying up right now. Hey. Again, small calculated trades is what we take here. Small calculated trades. Again, here's today's P&L. Small calculated trades. Yeah, I don't necessarily want people to copy me censorship, but I'm happy you made money, man. But again, I might have no idea what I'm talking about. I might be wildly wrong about anything. Maybe the market just dumps down here. Who knows? Saj, didn't you say the market was going to dump today? Let me go back and check the receipts on that, actually. Good time to go short. I have a bad feeling about today in the banks. Good time to go short. Market's flying up. So yeah, it's all good, so Saj. Yeah, banks did great today. I mean, I think there's probably some extension plan factor here at this point, though. Market's just up so much. The only thing, though, is that, like, this momentum is strong to the upside here. So, like, you know. Yeah, so again, market is flying up here. 1, 2, 3, 4, 5, 6 green candles in a row. Part of me wants to short this, but honestly, we're up so much. I'm going to short one contract here, and this is a very risky short. But I think we're just up so much already. It might be justifiable, but I don't want anybody else to copy me. All right, I'm just going to go ahead and get out there because honestly, the whole concept makes me nervous. And it looks like that was the right cut because, yeah, market is right back to the top here. Yeah, we're up about 280 on the day now. But I think, again, I have no idea what's going to happen. But I think the market is very extended and it's due for a pullback short term. No, we could keep going up long term. But yeah. All right, so yeah, it looks like my one little pullback. We caught that one little red candle here, and then the market just ripped up more from it. So still pumping up. Bitcoin back up to almost 31K. Market is just flying, honestly, man. Huge rips, dude, right now. So crazy market, in all honesty. Again, I think the more we pump up here, though, the more likely it is for a pullback. So. All right. Market's testing the previous high again here. Again, I'm not really touching it. I did that one short hoping we could get a larger breakdown, but then I wimped out of it. It looks like wimping out was the right move in that situation because honestly, we just kind of kept pumping up here. I mean, fear is healthy in trading. You got to have fear. It's been extended for the last couple weeks, honestly, but bank earnings are what's causing this big run up here. All right, team. There's a little bit of a dip here. John, statistically, out of 1,000 people, you are bound to run into certain people. What do you mean? Well, yeah, we're gonna get trolls and people that are just kind of unhappy with their life, so they kind of want to make my stream miserable, you know. And that's normal. I mean, misery loves company is the phrase I always say, because anybody that spends their free time trying to make other people unhappy in any way is just unhappy with themselves. You know, John's relationship advice definitely top 3. You know, therapeutic streams in the world right now. But no. prelim U of M, Michigan consumer sentiment. Don't let yourself get pulled down. You rock. Hey, thank you. Yeah, honestly, I talk about it on stream because sometimes it's just kind of dull here, sitting here waiting for something to happen. And so sometimes we just kind of talk about whatever because it gives us. It's better to talk than not say anything, even if it's about whatever. So we're just kind of filling dead air of the stream, 100%, man. Yeah, 100%. Misery loves company. It's the phrase I always use. Market's still pumping up, breaking highs here. Still moving up. Yeah. Yeah, man, look at the market just pumping up more. We'll see if Bitcoin rises up. Dollar index has been falling down with it too, so we got some time. Again, we do have some Michigan data coming out from the University of Michigan today. It is business inventories, Michigan consumer expectations and sentiment. Expectations are for 0.3% for business inventories. Michigan consumer expectations are coming in at 60, sentiment at 62. What this is current conditions is based on the answers to 2 questions, and expectations is based on 3 questions. Higher numbers, generally higher means positive for the dollar, positive for economical growth, and worse for inflation. And lower is usually better for inflation, but worse for economical growth on both of these sentiment and expectational numbers here. And we got about a minute before these come out too, so. All right, hold on one second, guys. All right, so finally got to get pulled back. I thought we were extended. Hello. Hey, I'm streaming right now. All right. There's the correction that we called out. So we talked about this correction, and again, this is what we expected. We didn't expect us to keep pumping up forever, and really we called the correction here, and we ended up pushing up a little bit more than this. What I'd like to see is maybe a little pullback, but again, we're already up decent on the day. And again, if y'all want to day trade on Top Step is a funded account program for futures, where they give you a demo. If you can hit the target on the demo, while following their rules, basically pass their testing, they fund you between 50 to 150K with a 90% split. Again, I'm always transparent about this. They're a sponsor of mine and they pay me money. And I think most people are going to fail these challenges. I don't think most people are going to be able to get funded because most day traders lose money. But there's no PDT in futures. And it's kind of the point of this, where it's honestly good if you fail these challenges, because what that means is that if you were to put the money up yourself, like to trade futures, and again, there's no PDT in futures, and you can day trade the S&P 500. That's what I've been doing all day. You can kind of see on the combine, I'm up about 280 right now on the day. But it's a lot cheaper to lose a funded account program than it is to put up 10 or 15K yourself and lose thousands, but if you pass the testing, if you're good enough to pass it, you still get a lot of the benefits. You still keep 90% of your profit. And so in that regard, it's kind of the best of both worlds. If you lose, you probably would have lost more if you put up the money yourself. If you pass it, you still keep 90%. Once you're funded, if you make 10K, you keep 9 of that. And again, this is regulated in the US. They also just opened up this new thing where you can trade up to 3 express funded accounts at one period of time. So it's actually really cool. You can trade up to 3 of these at one time, and I'll show you what I mean by that here. Look, so they just debuted this today, and there's also a 25% off sale going on right now. So the base package right now is like 120 something if you use my link. And so again, you get 25% off. You can earn and trade in up to 3 express funded accounts, test strategies, have one strategy. If one strategy is doing well, you can connect a trade copier to scale your profits. So just really, really cool. And again, 25% off, it just makes it really cheap. So where if you lose this, it's not the end of the world. It's much cheaper than it would be if you lost with real money. But again, it's just objectively cheap. And if you pass it, then you're still keeping 90% of your profit after that. So if you want to check it out, they are a sponsor of mine. Great way to help support your boy here. There's the link. There we go. Yeah, I'm going to refresh my stream. Let me put this up here. There we go. So if you want to check it out, there's the link. You'd also find the link in the description. I appreciate it, guys. And yeah, E-mini ramping back up again. I wanted to buy this little pullback, but I just didn't get a chance to, and it's all good. We're up enough to where it doesn't really matter too much. We are going to be doing a crypto show today, guys. All right, guys. So yeah, that's it for the day, guys. Again, market's pulling back a little bit now. I could buy this last dip, but I think I'm just going to wait. I'm up about 300 on the day. I think I'm just going to take that, guys. Not a bad day. Good luck in the market, guys. We appreciate the love and support as always. And again, when we end the stream, it's going to bring you immediately to the crypto stream that we're about to do. And so when we end this stream, it's going to bring you to BT Crypto. And we're going to talk about the crypto market right now. And so again, if you want to check it out, you can go to youtube.com/beginnercrypto. And yeah, we're getting ready to start that stream up pretty soon here. If it doesn't bring you, so it should, we have redirect activated here. So it basically, as soon as we close this stream, it should bring you to the crypto stream. If for whatever reason it does not bring you to the crypto stream, here is the link for the crypto stream. So you should be able to just join this link right here. So there is the link right there in chat, just in case it doesn't bring you there. But again, it should bring you there because, again, we're about to do the crypto show right now, guys. So I'm about to start that crypto stream up. And yeah, I'll see you guys over there when we do. So again, I'm gonna make sure redirect is activated just to make sure it brings you guys there, which I'm pretty sure it is. And again, we're gonna talk about a bunch of news in crypto, so be ready. Okay, yeah, we're good. All right, guys, I'll see you guys over there.